shorted Caterpillar. This guy does not believe in AI. He does not believe in data centers. He does not believe in the AI revolution. And you know what? He doesn't believe that, Samsung and SK Hynix, they just deployed 1.3 trillion over the next decade. Micron's deploying more. Everybody's deploying more capital to build out stuff. But hey, Caterpillar's going to zero.
Chat. What did I just walk into? Like, what's happening right now? I wasn't actually watching, but I mean, he's a trader, dude. He's an active trader. I can kind of see, but I mean, as an investor, yeah, this is not getting cut in half. It's got too big of a backlog. Is it stretched? I mean, there's a lot of companies out there, but I don't know that he understands the story. It's slightly extended. That's all I'll say. I can see it coming back into 9, but that's about it. So is he going for 10%? I don't know. And they're probably going to take a little profit before earnings on the high flyers. But I mean, I don't see it.
I mean, okay, Caterpillar trades at 42 times.
Yeah, that's what I'm talking about.
It trades at 34 times next year and 28 times the following year. This is still a huge cash generating company. I mean,
it's more than that though. It's like it's behind the meter energy is what it is. It's literally behind the meter energy, which is like super important. Why it's holding that premium.
All right, Nike is running. Okay, Q4 revenue, 10.97 billion versus 11.1 year over year is what we got. We have EPS. Oh my God, Nike just murdered earnings. Milken dropped 50K on Nike today. EPS is up 414% year over year. Revenue down 1%. We have revenue beating estimates by 1%, though, even though it's down 1% year over year. Incredible. Let it run for Milken. Let it run.
Let her rip. Speaking of Rippy, why don't you switch over to Bloom Energy real quick?
Oh my God, Milken is here. What's going on, Milken? Thank you so much. Your continued support means the world. You're amazing. Hopefully, Nike just runs tonight. Thank you so much. All right, I'm going to try and get the full numbers. We're going to switch over to Bloom Energy for Jason. BE, a Bloom Energy. Oh
Crazy.
my God.
Out of control.
Well, they announced the deal with Brookfield, right?
Yeah. Pretty sure that's what it is.
Abe, thank you very much. I own CoreWeave and Nebius, so I'm right there with you. I am right there with you, man. I'm right there with you. All right, we're going to get the – all right, hold on. Give me a sec.
Look at the Bloom.
So Nike returned $2.5 billion to shareholders in 2026, $2.4 billion in dividends. The EPS this quarter included a 52-cent benefit from the expected recovery of IPA tariffs. Full year revenue declined 3% to $2.10. We are not going to listen to the earnings call, but I am going to monitor the situation, and I'm going to pull the report and scan through it. Just give me a sec. Nike is now going lower. Gap up, Nike. Don't be dumb. Don't be dumb. Your turnaround's working, Nike. Don't do that.
Did they launch the AI site yet? Or the AI product?
I'm going through the report right now, so give me a sec. Wholesale revenue for Q4 was 6.6 billion. Nike direct revenue 4.1 billion. Gross margin 49.2%. Fiscal 2026 income, nothing looks that crazy. Can we get conference call is today at 5:00. We will not be listening to it. We have no guidance from what I am seeing for this upcoming year. I will report on this tomorrow. Here's the quote from Nike. We delivered fourth quarter results in line with our expectations, demonstrating financial discipline in an increasingly challenging operating environment where sell-through remains challenged.
Dude, who has a line into the Nike executive team? We can fix this company one foul swoop.
What are we doing to it?
You remember the Nike Fuel Band?
No.
You don't know what the Nike Fuel Band? Okay. Nike needs an AI personal trainer wristband that you can throw on there.
Yeah, the thing with the
Call it
lines. Yeah. Okay,
Yeah.
Fuel Band, yes.
Yeah, call it AI. Rip it.
All right, guidance will be on the call. All right. I will go over the call later and report back. Technical Tuesday, ladies and gentlemen. Let me get ready. Let me open up my notes. We're going to do a much better job.
Bloom is still going, by the way. I have to leave, though, right now, Steve, and then you can roll the intro, and then I'll come back.
I don't have the intro.
What?
Why would I have the intro?
Technical difficulties, everyone.
Did you send me the intro to roll?
No.
Okay, so if I don't have the intro, then it's going to be hard for me to roll the intro.
I think I have. Let's see.
Put in the chat. I got a spreadsheet out. We got to do two things before we start. First, start putting in the chat what companies we're going over. Why are you calling me on WhatsApp?
I'm not trying to do that. I don't know how to work this thing. It's there in March.
Oh, you want me to go back to March?
Well, if you click the top of a chat, it should.
Jason's acting like I know how to use WhatsApp.
Damn.
All right, so where am I clicking?
Hold on. Oh, you go into our chat.
Yeah, I'm there.
And then I think you have to download something. Save as. Is it a WhatsApp video? Oh, yeah. You know what? Share screen. What screen number is this? Screen 3.
Am I sharing the video?
Oh, I don't know. Yeah, go for it.
You should share screen. I want to make sure that there's nothing, because I saw your WhatsApp come up. I don't want that coming up.
You don't?
I don't think anybody needs to see your messages. Just saying.
They're mostly your messages.
Well, you know.
I think it paused anyways. All right. We'll have to do it another day. It's not.
All right, I'm making the list right now.
Nike's going red. Bloom's gone green. Out of control.
All right. Wow. Got a lot of companies on here.
Bloom's still going.
Bloom is still going. Oh my God. How many tickers do we normally do?
About 100.
Okay, well, I'm going to keep typing this shit in.
What are you doing?
I'm making a spreadsheet of all the tickers.
How can you have the tickers?
I told everybody to put in
where are the mods?
I told everybody to put it in the chat.
Where are the mods?
Listen, I don't ask the mods to do anything. Okay, I will take care of everything.
Chels, our board needs a little assistance here.
No, we don't need assistance.
Where's Hollis?
Dude, Hollis is doing Hollis things, all right? Hollis is doing Hollis things. Probably having some Weller right now, chilling.
Dude. I got some on my chat too. I got Redwire, Light, Enphase, Qualcomm, NVT, Palantir, ASML. Why don't we start?
So I got 40 names right now.
How are you coming?
I'm reading the chat. I'm typing.
Dude, mod Connie for a second. Can you do that?
I don't know where Connie is. I'm not at Connie right now.
All right.
Redwire, CEG, I have that. MVTS. So.
All right, stop. The way it works is that we're gonna have to go live, and we'll do it. We'll do it while we're live.
All right, so we should be good. I got 44 right now.
They're gonna keep coming, so you got to watch the chat.
Okay. I'm up to Krupa at 421. I'm 4 minutes behind. I'm trying to get through it.
Dude, there's no shot that you're going to be able to do that.
No shot.
No shot. What are you doing?
All right. So let me open up my chat right now. Not my chat, my
screen share.
Hold on.
Here we go, boys and girls. Let them get ready. Did that work?
Yeah, we heard everything.
There we go.
All right. So it is. Can you get a clock on us, please?
Yeah, let me get set here.
All right.
So we got a bunch to do today. I think, we always have to start really with the indices. Just kind of get a quick check on where we are, what's going on with the broad theme.
So which one are you starting with?
Always start with SPY, SPY. We call it.
Boom.
The SPOOZ for short, SPOOZ, as they do. And this was going to take a little bit. This is just set the stage, where we are, where we come from, where are we going. By the way, did you know Friday was kind of a little sketchy, a bit of a sketchy day. So this is coming into the week. This is SPY here, ticker, S&P 500. This is Friday's candle. Technically, this is not a good look. Technically, a lot of it's what we call heavy, right? In technical analysis, the most simple, we would say, umbrellas are bearish. Typically, here's your umbrella, and bulls, like look like that, are typically bullish. This is going to be one of those, let's call it bearish patterns that don't always work, but it is what it is. I always use this technical NFP levels right here. So 735 and open and close below 735 is what I was looking for like bad movement to the downside. I only have one. So of all the days here, if I drop down in smaller time frames, I'm doing a replay. So I'm on the weekend. I'm on Friday, not Monday yet. So I have literally just one open and close. These are all opens and close below. They don't actually count. None of these actually count. And then maybe one over here. So one, possibly 2 days outside. But that said, QQQ, just going to pivot really quick, was not even close on Friday. So QQQ did not have the same kind of setup. So it was a no action day on Friday. That said, remember the setup. It's actually fairly bearish coming into the week to this Monday, and we have a bunch of attacks happen over the weekend, and then by Monday we're back onto a standoff, and we're not, it's not World War III yet. And what happens essentially is we start going upside. We're 2 days into a very short week. Right now we should be heading right towards 755. Technically, this should be about 24 to 36 hours that we take to get to 755. So we're about halfway through right now. That's about it, right? So that is it for the upside. All in all, the entire range is right here. So this is the box that we're playing in. We're just bouncing up, then we could bounce down. But at the end of the day, for right now, it is decidedly sideways. It is not bearish. It is mostly neutral, coming off the bottom. So it's bullish for a bounce, but it's not bullish for a massive rally just yet. Not unless S&P is over, say 755 by next week. Also, coming into this Friday, well, first of all, Friday is 4th of July, but this is seasonally, I believe this is one of the bullish weeks of the year, 4th of July weekend. It is historically, I think, Google and Apple's best weeks of the year. They're not doing that great right now, but they're not going down either. So all that said, I think we have NFP coming Thursday, not Friday this week, and all hope is not lost. So that sets us up for a pretty solid bounce coming into this week here now, and that bounce is mostly made up of, I would call it short covering. And one thing I was just looking at today in my crew with my server, this is something called the COT report. I don't know if Steve knows what this is, but this comes out every Thursday. It's called the Commitment of Traders report. It is a statistical standing of where we are. What I want you to do is look at, oops, shoot, did that just go away? I just did that. Is look at one little thing on there's two bars down here. They're little, we call oscillators. They represent two different things. So the top bar or box here is this. And so there's a point on this chart that's actually super important, and that is this moment right here. This came out last Thursday. What this is, the green is non-commercial large speculators consisting of managed money and other reporters. What this was coming off of is negative 200 down here. So that means that the large speculators were actually net short coming into last week, and they covered a lot of their shorts right at the close, right at the end of last week. Red is dealers, which is essentially like market makers. So they bought that inventory from them. Over here, very similar story. Green, this green is asset managers, not overly leveraged, but pretty much max long on large asset managers and leverage funds. Take a look at this, negative 500,000. That means net short. Leverage funds are covering their shorts as well. So we're seeing the same thing happen on two different timelines for that specific report, giving us a little bit of confluence. But overall, I think right now, this is setting up to be a short squeeze if we have a good, let's say, if the market likes the NFP that we get this coming Thursday, because this was a very busy, dismiss the timer. This was a very bearish chart setup that is failing in spectacular fashion, if you will, which does set up really yet another short squeeze to the upside. QQQ is very similar. Are we out of the weeds just yet? No. But are we going down right here, right now? We didn't, and we should be. We're currently in the middle of a bounce. Q's actually looks much more bullish. Just going to go across the sectors really quick. Diamonds closing very, very nearly at the highs. You don't see this in a bear market, and you don't see IWM making all-time highs in a bear market. You just don't see that. It just doesn't make sense. You don't see RSP doing the same kind of thing. No. So am I worried? Not even kind of. That's the sentiment. And so I think this sets up for everything to actually look pretty good coming into basically tomorrow And then we do get hit with NFP on Thursday. So next week it's really going to be about, hey, where do we go from there? How does the market digest the NFP release on Thursday? And again, being a long weekend, short week, we're probably not going to see a lot of volume. I don't know what the volume is right now. Volume is actually holding up right now. I would expect the volume to disappear pretty soon once everybody goes on vacation. So, all right. So from here, what we would typically do is do some like major core picks, usually just like the, like your Nvidia or something like that. What's your highest requested ticker at the moment? See, he didn't do the tally marks on the highest requested.
I don't even know what the tally mark was. All right, the link access is updated on the link. You can get in.
DM it to me real quick.
It is good now.
DM me the link really quick in the WeChat. Where are you doing? Private chat. What's up? Do Palantir. Waiting for the guys here. So, what's your biggest positions? You know what we could do? We could do the combine. By the way, Steve has not updated my Honeywell yet, so it's not accurate.
I have not gotten around to it. I will get around to it.
Sure.
Don't worry.
Just saying, it might have been a little rigged.
Don't worry. All right, let's go down the line on the list. Bloom Energy was the first one.
All right, so Bloom is not going to get a 5. I think I'm gonna instantly drop into the 3s here. And don't forget, we have to talk Qualcomm.
Qualcomm will be last because we're going to get in fundamentals and everything.
All right, well, we're going to have to cut early for Qualcomm. So one thing I do want to say is that a lot of tickers in general are going to, we're coming off of a bearish type pattern setup that looks like it's about to be failing. Also, we have earnings season coming. So I think Nike was the last of the Dow 30, which Nike, did they beat their guidance?
Yes.
So Nike beating their guidance, actually, dude, that Nike beating guidance, holy, puts us at 29 beats, 1 misses. I think that is in fact, let me make sure. Yeah, that is in fact, because we were here, I had Nike to go. If that is a beat, that is in fact the best quarter I have on record in a very long time. 29 beats, 1 miss of the Dow 30. That's pretty solid.
Nike's down, but Nike
it is irrelevant.
It was a double beat.
Yeah, so there you go. All right, so Bloom coming into the all-time highs right now. So you got 3 kind of like topping candles right here. This actually looks pretty good. The consolidation that this is coming off of here, you guys see everything okay? I think we're all right. Is really this little small consolidation right there. And so honestly, before the close, this was looking really good anyways. Even at anywhere on this level, essentially this pivot had broken before the news hit anyway. So this being the largest kind of shelf of volume, which is right here on the right-hand side of my screen, being the major kind of pivot across this huge consolidation for Bloom Energy. It was already breaking out. The news is just like one more catalyst. I think if you come back in and you retest tomorrow, you actually look a little something like this. So 326 is where you want to hold. Can this pull all the way back? Yeah, it can. Around just underneath 300 is perfectly fine as well. This is a news candle. It's after hours, very thinly traded, but I believe it's a big thing. A lot of solar in general is getting some bids. Enphase has a very interesting setup today. Solar Edge, I think, also had some pretty big news. But this is all of that to say what we would call behind the meter, the next incremental energy or incremental megawatt for the data center build out. I think it's super important. Very squeezy here. If this continues, yeah, I can actually see. So just under 400. So call it 370, 380 stop one, 430 stop two. This goes to 500 on a continuation. So that is 500. That is Amit's pick. If he gets that, that's a double. That would put Amit very high on the list. Shout out Amit. He is down 8%. So tomorrow he will be opening up green with five green positions ideally. And that should put him in third place, maybe. Something like that.
Maybe.
Just like that. All right, next.
Space Mob, ASTS.
Okay, so ASTS was a good spot overall. I think $63 is, if I take all these lines off for just a minute, this area right here is the lower end of support, just about 60. If I pull this back even more, this chart is perfectly fine. First of all, it's a little bit wide of a channel. So if you're thinking long term, you're looking a little bit something like that. That's actually okay. And where you want to be taking shots is typically towards the edge of that that low end. Oops. Consolidation is just about the top of this. Let me just do. Can I do yellow? Yeah. This top right here. This bottom right here, essentially a double bottom. So all of this is to say this is a big breakout that way. Retest one time, two times, three times it's held. That's fine. Creates this kind of like channel up, almost a little bit of a broadening formation, but that sets this up. Same thing. You're still in the same box and really taking a shot at that 120 level one more time. If I put the drawings back on, resistance is 104 right here. This is a valid trade as we speak. And yeah, you're making your way back up to that 120, but you have to trim in strength because this is a bounce spot. It's not really the best spot, but it's a decent spot. I think Rocket Lab's the one that has the bigger catalyst right now. ASTA does ASTS launch anything? I'm moving on to Rocket Lab. I don't know if they launch any products or not, but on our launch any rockets. Sorry, on our last view on Rocket Lab, whether it was my channel or on actual Technical Tuesday, or the other one, this spot 99.58 was actually really important. It was a retest of that prior top right here. It held for just a little bit, but we'd stated pretty much right then. Also, if it fails, then your next support level is in between, just underneath 80s, low 80s, very high 70s. Guys, that's exactly what happened. Trading is very much if this, then that. And so if this breaks here, then you want to look right here. That's exactly what happens. That's exactly what happened. Now we're back all the way up. Again, a buy. And now we're back over that 99.58, which is pretty much the key level. From here, this can actually become a lot bigger, assuming that that's done. I think now that they've got Iridium, this story becomes much bigger, believe it or not. So this could be, right now you're looking at 120s for that first resistance area. 156 is that prior high. If it can get through, pathing looks like this. Looks like you chop this way, eventually get through 130. You have a little bit of a hard time, and eventually you can break through. That is a $200 number if it can get there, which is, again, yet another double. So already hit support and held. In addition to that, catalyst driven via the Iridium acquisition. Speaking of Iridium, yeah, she looks good. So look out for Real Matt Money. I think he's going to have a nice little video coming soon for this one. Other space bomb named Redwire. Also, if you wanted a higher beta, de-risk more or less, I think you're here. This is right off support, $10, give or take, something like this. You have the move. Resistance is 16 to 19. If you can get through this 13 and a quarter, that's looking kind of juicy for a nice little bounce on this one. All right.
Your favorite is next.
Yeah, let's go.
GLW.
Corning trim. It's a profit target. So if you're not on Corning by now, I don't know what to tell you, but you kind of need this. This whole chart, this company is intertwined, like you cannot. It's a re-rate story in general, right? So Corning is not the same company it ever was. They're likely going to have. I think they've got an Nvidia deal, Meta deal, and an Amazon deal. I don't see why we don't hear about a Google deal, a Microsoft deal, and an Apple deal right behind it. And I don't see why those existing deals don't continue to expand, which is why you're seeing a very expensive looking stock here continue to get more expensive. But the role it plays in the build out is paramount, right? Like it's massive. It's not irreplaceable, but it's yet another bottleneck, almost like memory, if not more. But here's your consolidation off of 160s right here, like clean consolidation break, retest, and then of that consolidation, it's essentially just yet another consolidation right here. Also break, clean, retest right here. So you have two retests, two entry spots, 1, 2. I think I just got slightly lucky on the draft. I don't know where the draft was, but it might have been right here. So that's why it looks so good. But either way, this was happening regardless. I think we're in an active squeeze yet again, heading in towards earnings. The way this is going to work is between 265 and 238 were the next kind of like profit target areas. This goes slightly over 300 ahead of earnings. As long as this can hold about 238 from here, this is perfectly fine. Trajectory is still 300s. I might expect a little bit of a chop. You can have some profit taking ahead of earnings, and then maybe one more push just in that $300 range. But then after earnings, it's a show me story. My concern here is that this is getting more price for perfection at 200 billion market cap. I think that the re-rate has happened and it continues to happen. Now it's more about continue to execute and continue to build on the existing deals that you have. Next.
OUST. I have no idea what this is.
It's a small cap, mid cap. I think it is small mid cap season. $4 billion is extremely small. I think these companies are, from a market cap perspective, we go back and look at what we were just talking about, IWM at the highs in the face of rate cuts or rate hikes. Yeah, no, that doesn't happen. It doesn't happen in a bear market. That's what's not happening. Essentially what you have is you have a big giant base right here, up to 49, and it's just now breaking out. I'm like you, I'm not really worried about it. I'm not really in that. What the hell does this company do? Don't know. Doesn't really matter. It's probably in the right space. LiDAR sensors for machinery, cars, and robots. Yeah, so this is the edge, the AI edge, the physical AI. I didn't hit this play, whatever. I'm almost done. This is on its way to mid to high 70s, potentially 80. So measuring from here to the absolute extreme low, 50% retracement is going to give me a pretty clean halfway point right here, about 75. Also, if I were to take this consolidation and a measured move, the first breakout of that takes me to 75. That is about 50% of this area right here, and a full 100% extension, meaning like if I were to double that consolidation, that's about mid 90s. So mid 90s, just under 100. That's where your big resistance actually holds is right here. Big resistance there, and that goes all the way down to 73. So yeah, there you have it. It's on its way to 70s.
All right. People are asking about
hit, and then it's going to change.
Watermark being less transparent or more trend. Yeah.
Yeah. Okay. Lines. Ticker watermark. It's okay. There. That is oust. So, and for the candles, I have to zoom out on something like this quite a bit. You may not be able to see it as clean, but there you go. Next.
All right. Next, Keel.
Really?
I don't know.
How are you getting these?
I'm going off the list from when I was typing everything in.
Oh, from the very beginning?
Yes.
All right. We need we need some help here. Guys. Oh shit. So anyways, Keel is, I mean, if bulls are, or if umbrellas are bearish, bulls are bullish. This is a bull, but like, yeah, it's a bullish setup. It's extremely small market cap. This is a power grab crypto miner. I could give a crap about this. This is a lotto. If you're looking for a deal and you want to, copy trade somebody else, have at it. I got nothing here. Do not. I'm not gonna crap on it, but it's no trade. It is a definitive, decisive, do not touch. If you're long, stay long. It is not a short. It is already doing its deal, and you let it continue to play out. There's nothing to do on Keel right here, right now. Again, like I said many moons ago, if you get a pullback to fours, that is actually a better spot. It is not broken out. It is trying to break out. You got to give this one some time. At best case scenario, you're gonna look at something like this, and so that is what good looks like, by the way, which means that $4 is in fact what you would hope for a pullback on, which is a lot of percent, but it is what it is.
All right, so I have the tally system. Thank you, Charles. AMD is next.
There's something that's more. All right, cool. AMD is on its way to be $1 trillion company. I just posted something about this earlier today. Yeah, so these are pretty clean. AMD here. Actually, shoot. You know what? I need to do. My goodness.
Did you say $1 trillion company?
I did.
You know how many shares I sold of AMD at $2? I'm sorry, $3.63.
I heard about it actually.
No bueno.
Sorry, I got to get our link out. Nobody likes a crybaby.
No bueno.
So this is this is where we're at. So AMD is coming out of a pretty good rest period. I say this rest period is about 30 days. Look, this is exactly what I'm talking about. We're coming into the next earnings season, and we're coming off of literally the best earnings season I have on record. I couldn't tell you how long it's been since we had something like that. So earnings anticipation is very real right now, especially with the AI build out. That said, this is early August. So within about 2 weeks before earnings, we usually get a little bit of a pop. Now that pop is fake as all hell because it's total sentiment and it's completely momentum driven. That's going to put this just over 600, likely before earnings, potentially as high as 655. And that is measured from this consolidation right here. You break out again 50% of this range. These measured moves, if you don't know how they work, I'm literally taking this and I'm just doubling it. That is 655. The halfway point is about 600. And at that level, this is already $950 billion. 600, I think, is 600, $1 trillion market cap. Should be. But yeah, you're in an active breakout. After a 30-day rest period, you're ready. You're ripe and ready to run.
All right.
A
Next
pullback at
one.
540s is perfectly fine as well.
So Lena's going to have a party, is what you're saying.
Lisa?
No, Lena's going to have a party.
I don't know. Even if AMD pulls back like this, it's 490. That's the bigger support. That's perfectly fine as well. You just don't want to see this below 490.
All right. Micron is the next one, Jason.
Micron channel up. Yesterday.
What are we doing here?
It's a long. It's a long. I think that it's still a long. I think it was a long yesterday morning at the open. Actually, Amit called me like early. It was like, can we model a trade from Singapore? But yeah, this is the channel that Micron has been in since the 450 breakout. You're beyond most extensions here. This is just, you want to see it hold momentum. So anytime you're essentially just watch. I'm gonna take this down, and you take a tool in your charting software called a ray, which is like an angled whatever line, and you connect the highs and you connect the lows. It's very simple. And what you should find is a large series of higher highs and higher lows. This is what we call like the trend count. This is your just broad trend. This is your channel. You want to go long when it's coming off of the bottom of said channel, and you want to probably sell some calls or something like that when it's at the high end of said channel and cover them. And so from a trade perspective, from an investing perspective, yeah, you're just kind of like riding this. But from an active trader's perspective, this is exactly what you're looking for entries. So out of the gate, Monday morning, bounces up about 150 bucks, holds today. You can see some kind of small pullback, but again, as long as it's still in this channel, even if this comes back and retests that channel around 1,000, that's still what you're looking for. The current consolidation is a consolidation break, just like that. It's okay. I think this is more of a sell puts, sell calls, maybe directional premium grab on this guy. That looks ideal. It doesn't look like it has a lot of gas in the tank, but it's definitely structurally sound.
All right. Next one, IREN.
Yeah, IREN is good tactically. This is sorry. So let me just sign this off. I say it doesn't look like it has a lot of gas in the tank. It has to 1,400. That's not a ton of gas in the tank to me compared to some of the charts that I have, but just so you know, it does have that. About 1330 first, and then potentially in the 14s. IREN is literally on support. IREN is one you'd watch probably tomorrow, something like that. This is the very low end of support here, but this is the high end right here at 45. So 45 is actually a pretty solid retest. Your entire like consolidation range is this guy right here. And you can kind of see like where is this? Again, bulls are bullish, you know, umbrellas are the opposite. All of this area right here, you should be able to see it now. High activity zone right off of 45, where it was resistance. It was support for a little while in this entire range. It was support here, namely right there, support. So you really want to see it show up as support. So is it right here right now? Sure. Does it have to go immediately up? Absolutely not. Does it matter? No, because this range is literally from like 45, just under 45 to 40, right in here. This is the first one, and the bottom of this entire thing. Where is this measure from? From this most recent swing high to swing low, I believe that is. Yeah. Let me just delete that and make another one. Swing. You know, I can go from this. I'll pull these exact right there. Yeah, it gives me exactly that spot. So 43, cool. If it doesn't hold right here, right now, then you probably will go all the way to the bottom of that range, which is about the 35s. So again, if this, then that. If 43 doesn't hold, 43 and change doesn't hold, then this does go to 35, which likely becomes a buy anyways, and this turns into a bit of a rocket lab type situation. Regardless, this is still on track to do what it was doing before. So if this entire thing becomes essentially the breakout, right? Your big bearish zones at $60, that's your resistance. Then you get to 70. So pathing looks a little bit like this. Number one, you could get some chop eventually here. If you can get through that 68, then it's 78, and this is $110+ stock. But regardless if it's this path or if it's this path, it doesn't matter because the path is the same.
The next one is ASML.
We're going large cap. I think you guys are looking in the wrong spots, decidedly. ASML is fine. It's too big to have like major legs. This is on its way to 17. Perfectly fine, totally normal. Good chart, having made it through 1500. But what's your market cap here? $703 billion. Probably get to $1 trillion. Probably get to $1 trillion. Yeah, very much doing what it needs to do. I think you stay long is wrong. There's no reason to sell this. I think this situation, like the winners continue to win, but there are bigger winners from a stock appreciation perspective in this market, going a little bit smaller.
All right.
This you want to see hold 1930. Otherwise, if you lose 1930, you are going back to 1650. And if you lose 1650, you are going back to 14 and change, which is probably a buy right in there. That's your real support. But ASML's got earnings next week or 2 weeks from now. About 2 weeks from now. 2200 is your next stop if this gets through $2,013. All right, next.
Intel.
$200 stock eventually. First breakout here today. I already have this trade kind of teed up. This is just doing its thing. Yeah, this is going to be $200 like very soon. You don't need to see my trades. Very, very soon. It's going to be, you already have a pretty heavy consolidation break. About 2 months of sideways action. Today is like right at the top. So these you kind of want to give it a little bit of like breathing room. These larger cap stocks, they can be a little whipsawy right now, but at the end of the day, they're all going. This one is, I think, has more juice than the rest. Like ASML, we said, okay, 2,000 to 2,200, 10%. Intel, I'm saying, 130s to 200 in shorter order. That's and these little pathing things here, this is what that looks like. So accumulating essentially anywhere in this area is close to 120 as you can. Does it actually pull back to 120? Well, it already did once. You might have missed it right there. So Intel's good to go. Again, end of July. This is all pre-markets, pre-earnings run-ups. It's not real, but it's sentiment driven. And coming off of these big earnings, like, yeah, you're going to get some moves ahead of your reports. Whether or not they hold on the actual report, whole different story. I could see 150 first, 155s. Yeah, but this pathing. Next, brother.
Mr. Softy, Microsoft.
Who's picking these?
Tally system, man.
All right.
Well, you know, like Microsoft, because I got some shit to say about Microsoft.
It's perfectly fine, but like, you shouldn't be trading Microsoft. You should be owning Microsoft.
Yes.
I think there's a very big difference. You should absolutely be owning Microsoft. You should be trading something better. But yeah, this is decent off the lows. You got a little bit of a double bottom. It is a clean retest The cleanest retest we've had since April. This probably holds to me, especially coming into earnings. I just don't see why. I mean, I could be wrong. Earnings on the end of the month. Earnings at the end of the month. This is the spot, 350. I think all your mags are perfectly fine right here. Perfectly fine. This is more like it's at least consolidating for a little bit. And if it does have a big jump, I mean, this is either a very short-term trade up to 390s and call it a day, because you got a exit stage left from a trading perspective in that 400 range. You get to 430 again. I think it's good if you're on leaps or something like that. You're perfectly fine. But again, if you're on leaps, we're not doing short-term stuff here. Cool. Next.
All right. Honeywell.
Two stocks, right? So Honeywell, this had a reverse split after the actual split. So we got, for every 2 shares of Honeywell proper, HON, we actually received 1 share of Honeywell Aerospace, of which Honeywell Aerospace is going to be immediately put into the S&P 500. So there's some forced buying on that, FYI. Probably sets up for an easy trade. Honeywell, what's left of Honeywell International is a few different things. To me, mostly the data, like building automation. There's a lot of really good stuff behind the meter energy, believe it or not. Once they get to report, which is July 23rd, and they report on the thing about Honeywell is that this conglomerate, as it was just too confusing for people to understand. It's so big of a company, and the individual business units did not have the opportunity, in my mind, to really like showcase what they're good at and what their best attributes are. I think that this scenario is what actually unlocks that. That said, I think this is pretty straightforward. It's a massive. I'll have to go on a weekly and just do a different layout here. It's a massive consolidation. All of this dipping right back into it. Even if this were to pull back into 190s, that's fine to me. But that is how this goes. And longer term, say within the next year, this could be about a $350 something stock, just from a technical perspective. And I'll do this way. Yeah, 350s on just Honeywell International. HONA, different story. But again, after the split. So after the split, this stock got a reverse split. So it doesn't look like it's changed at all, but it actually kind of has. So this stock got a reverse split, and Honeywell Aerospace did not. So it's all funky on the metrics, but this is Honeywell Aerospace coming at 220. Next,
Google.
Your leads did not become Hona. Can you pull that up real quick? So like on the options chain, so if you're in the crew, you should not have become Hona. If you had leaps, you should still have them in the Honeywell chain. I closed all my options before this happened, but on the actual chain, like you should see detach. Oh, I just froze my Thinkorswim. I can't show it because every time that happens, you should see something that looks like this. Oops. You should see on the actual chain, you should see like splits. They look like this. So 50-50, 0 is SOLS. That's the first one they spun off. But you should see, so December 18th now has 1, 2, 3 series. These are called expirations, are called series. This is Solstice pre-split, HONA pre-split, and now this is just HON Honeywell International by itself. All right, you said Google?
The googly.
Google looks good. This is just like the rest. So like a clean break retest. So the pullback was potentially to, I think, 350 of this play. From this low to this high. Yeah. 340 or it's potentially down to 320s. That would be support. Big support. First level of support is at 340 right there. So that's measuring essentially from this extreme low to this extreme high. This is literally 50%, which is your basic pullback after a big move. That's pretty typical. And also in this case happens to align now. You've gotten back over this high and this pivot right here. So you're on the mend as long as it's over 349. That said, where is it going? I think, again, more pre-market, pre-earnings kind of run. This should take you to about 380s, actually, right in here. So this is where the bears live, right here, which means that pathing can be like a pullback somewhere in here and eventually a press up to you. That's usually it before you get another pullback like this and eventually kind of push through if it can push through. But that's what pathing looks like on Legoogs from here. It actually looks pretty okay.
All right.
When does Google have earnings? Oh yeah, okay. So Google
3.5
earnings
weeks.
end of July.
You ready for the next one? It's a favorite. Crowd favorite. CoreWeave.
CoreWeave is good. That's right off support. So again, support being right here, as measured from this extreme high here to this extreme low. This actually has a good edge on your support, similar to where Iran is. So a lot of the neoclouds are, I believe, right in this area. These are at your best trade locations, if you will. It's got to go through 103 for sure. CoreWeave. Here's the thing about CoreWeave. If I were to take this and just no lines again, this we go back to bulls are bullish, umbrellas are bearish. This whole thing that might have gotten people like confused about, that's just a consolidation. This whole thing is a pattern called a bull flag, actually. But notice like right here and if I were to draw this across, if this is what was kind of resistance here, and a pivot right in here, this is slightly higher. Can it come lower? It can, but it's still doing this consolidation ahead of earnings, which is, again, very, very soon. This whole thing, does it mean that it's going to break out? No, right? Because like your large consolidation is literally this entire range. But taking a trade anywhere in this area, if this is like, let's say the last high, right? And you have a series of lows over here, and you clearly broke your high there. I'm just looking for a higher low, and it can be anywhere, probably right in here. So I love CoreWeave's trade location, like capital L love this trade location from a longer term perspective, definitely for a earnings run up, and at least to get through, if it can get through this kind of breakout zone, which is about $100, give or take. Let's call it through this area right here where your resistance is, namely this little widget right there. That should at least retest again one more time this area, same area. Let's call it the 4 shot. And so if this is 1, 2, 3, 4, I think you take it, right? Because usually that is the one that actually takes you through possibly to the promised land of 2 plus, which is all that said, where we're going is 145 remains resistance up here. This $92 is a perfect break. Like I was saying before, can it come down lower? Yeah, it totally can, and it still be valid, right? Even if this failed and it comes back down to 72s, I still buy it. So I don't think anything changes on this chart. 145 remains resistance. It looks very good to me. If this can actually break out in a few years' time, this has potential to be 300s. Again, just taking this here from a technical perspective and duplicating it, that's just over $300 right there. Cool. Next.
Meta Platforms.
Sell. So he goes, yeah, umbrella, big umbrella, totally different view, right? Like you should be able to see the difference now. Completely different. I think you're anticipating a move here if you're looking to trade this. It's had plenty of shots. I think if you get lucky on Meta, you're literally just getting lucky here. There's no tactical advantage anymore. This looks like 350. Yeah, so I mean the next up is 430s, 440s here, and then potentially down to 350s from a technical perspective. Right now you're battling this, right? So you have this from very long ago breakout, retest, holds, but now the issue becomes this is like this downward kind of channel, and you're just kind of like bouncing in a downward channel this way. So can this get back up to 630, even 650? For sure, it totally can. But it's even in that case, it's not even in that scenario, it's not out of the weeds, and it's still at risk to seeing sub 400. So it's fine from a long-term perspective, but this is not ready from a near-term trading perspective. That's Meta. It like best case scenario, you get that pop into 650s, but I mean that's $100. I think with trading, you're like people will see like there's the hardest thing is deciding what's worth your time and what's not. On this one, I don't know that it's worth your time unless you're very short dated, like very, very short term, extremely short term, over 570 to maybe 595. Okay, next.
Light, LITE.
The space mob is flying, guys. Lumentum. I think so. Lumentum looks heavy, large cap, but this one is actually, if this goes any higher on Lumentum, anybody that was short this is going to start covering very soon. So unlike Meta, where it's just gone too far, it's too far gone. Light is not too far gone. It's much smaller market cap, so it can do it. The biggest issue is that your resistance is in that, over 900. So right now it's honestly, it's just hitting its head up against resistance. On the right-hand side of my screen, I don't know if you should be able to see it. This is called a volume profile. It's probably one of the most important things that you use. I don't, if you notice, I don't have those squiggles down here that are volume. This is an oscillator, not even that important. I use volume by price. So I think from that perspective, you can see where real resistance is, and it's hitting its head up against resistance. So what that means is that people were essentially like they were selling here or buying. They were buying here. People bought in this whole area. All buyers. The buyers are having to go a little bit deeper, so they're having to dig into their pockets a little bit. But the issue is that as it kept getting higher, it kept running into resistance here, all of that. So this is sellers as well. So the buyers showed up. It's a question of if this many buyers was not enough to get it through that $1,000 level, is one more shot over here going to do it? I don't know. But you will know from the chart if it's over 950. Then the answer is decisively yes. So that's why. So a level like this matters quite a bit. Where this is trying, and like I said, 960s, 950s, somewhere in that area, right around here. If Lumentum is actually trading over that area, then the bears have been overcome and the bulls are winning. And that means that this is actually going back into the 1250 area, which, I mean, quite frankly, that's where this is heading anyways. Even if this were to pull back significantly, I think that's perfectly fine. If it does lose 750, your next area of support's kind of towards that 200-day, around 550. That would be an amazing pickup. I mean, I would buy that, but I don't know if you're going to get it. So for right now, I think you're just going to potentially go sideways. Hopefully this doesn't have to wait until earnings, but yeah, this looks like it should be 1300s, 1250 plus to me. I like this.
Next one is Lumen.
Lumen is frustrating. She tried 1, 2, 3. I had this as count 4. I'm about to. This is becoming like an opportunity cost at this point. Yeah, this is the lows. I think this has to be technically the lows. Otherwise, I'm down to 6s, and I don't really care about it anymore. But today's the second day kind of piercing through. The whole thing about this cohort of companies is that the last earnings report for all of them was not, oh shoot, all of them as in like telecom stuff, what was not good. So the industry as a whole, I think it's going to get hit with that, specifically them and one or two other players. They're not doing that great. I think that they become extremely important for the build out, but does that mean that these specific companies necessarily get rewarded? It's a different story. It's perfectly fine. $8 billion. If I'm going to take a leverage bet on that just the smaller market cap is the leverage. But yeah, I think it's here now that it holds. This becomes the earnings story. Early August, then we'll see. You're technically at the very bottom of what I could consider support, literally right there. So this is what I'm talking about. So, like this being your channel, you come down slightly more, but not much more than this. And then I wanted to see it start to recover. That's what we're looking for.
Next one is GE Vernova, GEV.
I mean, it's a great chart. We are channel up. These are never sell. Ever, ever, ever. What's the backlog on this bad boy?
I don't know off the top of my head, but it's
some
big.
insane billions. Yeah, so 856. That's literally, I have this on, you probably can't see it. So I'm a weekly chart right now. But that's measuring from this low to that high. So meaning that this is like one move. That's the whole thing is one move, which is that's multiple weeks. It's like a year. And then 50% drawdown of that move is literally 856. It could have gone down to 750 and I probably would have picked it up. The 850s looks like your buy. And if this can continue on, really just this makes the whole move potentially a little bit more overdone, but this takes you to 1500 if you're trending over 1250, 15 to 16, potentially 1700, all the way up this ladder right here. So this becomes a momentum play, essentially where you have stop 1 here, and then you have stop 2 here, and then you have stop 3. This is how you map out a trade. Stop 4, 18s. So in this instance, what has to happen is that you have to hold each one of these levels. I mean, you go sideways for a while, right? And you could pop and hold and kind of go sideways for a while, and then you go, and even here, like up to that, you could pop and go sideways. That's fine. But that's the trajectory for GEV. If it actually gets through, lands on a new all-time high. This is a daily chart here. Looks like it's going to happen to me. Again, these are all earnings, pre-earnings moves that are like the market anticipating good earnings. And by the time we actually get to earnings, it's a different story. So it's going to come down to what the companies actually report. All right, next. I'm going to do next. So PWR, since you're on this track, this is like Quanta Services. You have the same exact setup, but you're not at the actual top. So if you want to pick one, probably picking here is going to be more ideal. If you want to go, look at this is a squeezy setup. If this goes any higher, bam, 800, bam, 1,000, right? So way more beta here, but the biggest beta, Powell Industries, smaller in the same space. All of these are the same kind of sister companies, by the way. Sorry, I'm in the flow state. But if this gets a little heavy, if Powell goes any higher, cracks through 3, this is very likely a $400+ company. This one sitting at a $10 billion market cap. Yeah, this is like switchgear and stuff like that. So what it is, GEV makes like turbines, all that kind of stuff to power the grid and specifically the data centers. PWR aligns to this because this is the company that does the labor to install all those things. Powell Industries is the actual switchgear that connects to the data center from the grid. Well, anyways, moving on.
Palantir is
PLTR. She's good, man. I think that was it. I think that we talked about this, didn't we? I think that. Did you catch it at 106?
I actually, would you like to see what I did?
What did you do?
Well, you know, Jason, I admit when I am wrong and I can change my opinion on a dime. Okay.
Yes.
When the data tells me to become bullish, I become bullish. And guess what I wrote on June 26th on the record?
Oh, you wrote an article?
You know, I may have put an article out on Seeking Alpha going from neutral to bullish at the bottom, it looks like. When it was 109.04 is when I put
nice. I don't hate it. I don't hate it at all.
It looks inexpensive going forward. It's still expensive today. The forward valuation makes more sense to me.
And I think that's the lens that you have to look at the entire market with, quite frankly. If you're going to understand what's happening at all, right? Because if you're not, it makes no sense, like literally no sense. But anyways, what I did is I took from the inception, like from the absolute lows and the absolute highs, like all-time low to all-time high, and 114 happens to be an exact 50% retracement from the all-time low to the all-time high. Now, that said, is that the absolute like best edge spot? No, the best edge spot is about 80s, 85, give or take. It's one of those moments where like I don't know that I'm gonna get that. But what we have on Palantir is actually I would define this as price discovery, new price discovery. So we have actually a series of higher highs and we have a series of lower lows at the same time. We call this a broadening formation as represented by these white lines up here. So it becomes like a bit of a megaphone pattern. And usually you want to take it when it's coming, like extending beyond that megaphone. I had confluence here around that 114 level, which obvious to me is this pivot right in here. So I think this going for a bit of a bounce, honestly, as high as 130, sets up for a really good risk reward trade in short order ahead of earnings August 10th. So I like this for a pretty large bounce from here. Still, I know off the lows it's like 10% off the lows. I don't even think this is halfway done. I think this is more of like you could see 140s again. but at which point I would get a little bit more concerned, and real resistance remains up in that 165. But the way this sets up, as weird as it sounds, it sets up like this to 170s and then all the way back down potentially. But that's price discovery. And I think that this, depending on how high it goes, you're going to, I'm going to pause this. You're going to hit so see this, you're going to get like that. And now I'm on a weekly. If you can continue on, that's 140, 130, perfectly normal. Then this is like 150s. It's at this point that I would possibly be a little bit more concerned. It can actually get all the way through here and actually make yet another high, but that's exactly what I'm talking about, a series of higher highs and a series of lower lows at the same time, which is just about 170. I would be very cautious there. I mean, extremely cautious. And I know I paused the timer. And at that point, I would actually expect this. And I would welcome this if I'm a Palantir shareholder. The best thing that you can see here is if this whole thing happens at 170, what you want to do, you want to slap some short calls, to go ahead and sell your $200 calls, sell your whatever calls, get some protection on. Expect this to pull back, seemingly like brutal pullback, but it's not going to be that brutal. What you're going to look for is you're going to look for this downtrend here to actually be broken, number one, step one. Step two, you want this to actually be retested. And then you want to see it kind of go sideways. And this becomes step three here, where over 145 holds as a higher support, higher low, after making a higher high. This in order is exactly what takes this through, and through. So if I'm a Palantir shareholder, do not get discouraged if this takes a huge dump. You kind of want that to happen. But so I just laid out the plan of exactly how that has to happen. A lot of speculation there, but that's the pathing of best case scenario right there. Cool.
All right. My second largest individual holding is next. Nvidia.
Oh, I thought you said next. Sure, it's not next?
I said is next.
Oh. Well, it seems to me that we have something very similar here. So, like, again, this is a downtrend. So the broken downtrend, I'm going to turn this red, broken downtrend. This is what I'm talking about. If you have that first move and then you want to see it retest and hold, that's how you get that. You don't have a continuation on this. We know we're the biggest. So again, look on the right-hand side of my screen where it looks like a big mountain. That's where the most volume is, right? It's a broad swath, about 180. We know that's where support is. That technically, if this is our prior high, we have, I think it's it's probably equal low actually. Barely breached it. Lower high, lower low. Oh, we're gonna go off of this one here. Low. Yeah, this is fine. This is fine. You're holding a higher support. You can kind of see it on the right hand side. This setup is not. I didn't push play. This setup is not one that's going to be parabolic at all. This is a slow, monotonous, maybe kind of like potential grind like this, literally until much later in time. But if this holds, this doesn't even have to be the bottom. Your resistance is closer to 220, 200s to 220s, which is going to line up to this. So even if this goes like that and hits essentially this level right there, I could still see another. So what I'm talking about is this, still see another pullback. And in that case, you want to see another higher low. So higher low, higher low. As long as that's happening, then you get this. And you have to take a few wind ups at this to actually happen. and eventually, it should. But that's again what this kind of setup looks like. It's not. It's okay for very short-term trading, but it's choppy and maybe frustrating for some people if you don't understand what we're looking at here. We just don't want to see this like make new lows. I think this eventually makes higher lows, and again, coming into earnings, we're probably closer to 215 by the end of August. If we get too extended and you actually do crack through this, just know connect this high to that high, and best case scenario is that you actually make a bit of a channel like this. I think that's possibly wishful thinking, but that's a very wide channel. I think this is one where it's not setting up to be violent by any means, but probably slow and steady wins the race for Mr. Nvidia.
So what you're saying is I got a chance.
Depends on what you're comparing it to.
Depends what you're comparing it to, he says.
Yeah, I think it's fine. I think it's perfectly fine. There's no reason to sell this at all. Actually, I'm just looking at something here. Is it the best stock of the market from a technical perspective? Not even close. But is it beautiful in its own right? Absolutely.
Love it. And I'll take the pump today that we got.
Yeah, it's not even, dude. It's not even I wouldn't even consider it a pump. Like, look at this channel. It's a thing of beauty, right? It's a thing of beauty. So, like I was saying before, if you get another dip into that area, just like that Micron channel, this is very long term. I mean, you're good. You're good. Don't worry.
Don't worry. Just buy more.
I mean, or just hold it.
Oh, I mean, the dividend I just got screwed me up.
A bit, okay.
I like seeing zeros at the end, and now I have all these crazy numbers.
Oh, because you have to reinvest.
That's right.
Yeah. Partial fractional shares.
It's a good problem to have. All right. SaaSpocalypse. Service. Meow.
I would venture to say SaaSpocalypse is still alive and well. You're consolidating. You have earnings here. So it's in the dumpster, no doubt, right? This has to get over 110. 110 is actually your inflection point. I gotta hit play. So 110 comes from, I'm gonna zoom out on a weekly. And so you might be able to see it now that it's on a weekly scale. So this is a lot of time on the chart. This is like 5 years, 10 years, 10 years. Here's the prior low that we're actually trading off of right here. And this is your actual support, which by the way is like 67.40 is the low. I can pull this over here. So it can go to 67.40. Doesn't really change anything. You're setting up for a bit of a bounce, but 110 is very seriously like a major inflection point, and really where it became a whole nother company between 2023 and 2024, this area. So this is any buyers here that are not buyers here, since this is a long-term stock, I think that you can actually like get up into that, but this is your resistance plane on the stock right into 130. So this little blip, which that's like 40% or something from the lows on that big bounce, it might have felt like a lot, right? It's 71% from the lows of the year to 140 and then come all the way back. But when you zoom out and you look at this slightly objectively, you're like, oh, okay. Maybe it's not. Maybe it doesn't even show up on the radar. So that said, zooming in a little bit more, this is how it works, is that you can see this a little bit better, right? So this whole situation, and again, putting the volume profile on the right-hand side of my screen, this is where, so much traffic lives. It's very hard for this to get through. So because of that, 110 is just slightly over that. It needs to get over 110 in order for this, basically any technician is going to tell you this, in order for this to be a viable vehicle to do anything with. So until then, it just basically looks like it's building some pressure, and you do have like this small thing, and so that pressure is probably going to resolve on earnings. But just so you know, this doesn't mean that it's going up or down. It just means that an inflection point is coming, whether it's this way or this way is actually TBD on the chart. It's not out of the weeds, like it's not out of trouble until it's over 150s. So I mean, risk reward, you're very close. You're much closer to the lows than you are to the highs. So I could say that downside is about 25%, just under 70, but upside is significantly higher. Even from here, let's call it 55% up to the higher end of resistance. So from a risk reward perspective, not horrible, but it is not. It doesn't have the Momo yet to say that it's really happening. I think realistically, a big pop on this is 185s. Cool. Next.
Big pop is 185, he says.
Yeah. Gotta take measures though. 185 for sure. Like that is heavy resistance up here. So that's like, if you can get through this, I think this builds and then you can get that, but that's when I would be like, oh, okay. You might go sideways for a while.
Hymns.
You like the healthcare today, huh?
It's not up to me. It's the chat. The chat.
Well, it's not horrible. Not horrible. 25 here. Break. Pull back. Oh, dude. Actually, I wish I would have done it from this perspective. Yeah, so I'm getting the same kind of stuff here. Dude, I didn't realize that 14 was that good of a pullback. Resistance is twofold. So you're right into it. I think as opposed to, CRM where I'm like, there's a lot of traffic area that CRM had to get through. That traffic area ends right around 29. So having pulled back and bounced off that this week, bro, she looks like she's got a lot more in the tank. Like,
really?
Yeah, not a joke. I mean, I'd say, so what's a lot? I guess that holding 29 was crucial. Like, you see this right here? The way this stuff works is like, okay, it's a big mountain range on the right-hand side. And essentially we have like, I don't know, Mount Vesuvius over here and Mount Kilimanjaro over here. And these are like high traffic areas. In between them where it's like low, we call this like the valley in between the mountains. This is high velocity path. So there's not a lot of resistance in between these 2 points, point A to point B here. And so price can actually move through those kind of levels very quickly. I mean, just to note, we have two small stops right here and right here, but if refined even deeper, 35 to 42 is pretty quick. And you can see it on the chart too, like how fast does it move through this area? Very quickly, it moves through this area. Very quickly, whether it's up or down, it moves through that area extremely quickly. So that's why I say what I say here. And I don't think that story is going to change. You're right on it. So 34.60, if this goes any higher, I think this is setting up to be a very good trader. Maybe like 1-2 days, literally all I'm talking about. 2 days could be $45. Yeah, I can see that. Maybe in like weeks, 2 weeks. I gotta be careful what I say. But yeah, it sets up to be very squeezy. Again, though, they have earnings. So you probably get to the 40s soon ahead of earnings, and then depending on what happens on earnings, a whole different story. But yeah, I don't think this is done. You could see 50s. That'd be wild if you caught the $15 or sub $15 lows to get to 50.
Wow.
I know, right?
That'd be pretty wild. All right.
Connie goes, Jason, see what's your favorite? Look, I think that right now, here's my list of I sent this in my groups, like, dude, there's so much right now that's so bullish. I couldn't even put them in there, but what I'll say is I think that right now, sub 50 billion, these are my thoughts. So I literally sub 50 billion, sub 20 billion market cap is like the explosive spot right now. If you can get the sweet spot is between 15 and 10. But Max Linear, if you don't know about this, you can look this up. This is in the AI kind of build out. Siva Technologies, extremely interesting. This is an IP play for the edge. I think you're building right into resistance here. If this can get through, this is actually a beautiful setup into 80, potentially 120s. A ton of room to go on this guy. Form, I think this is one of our draft picks right now. High and tight, ready to break out. I'm blasting through my list, and Connie asked for it, and just giving you guys a little something. Heavy consolidation here at the tippy top, about to break. This guy I like quite a bit. This is kind of like picks and shovels. Over 165, this is a $200+ stock, maybe 250. And earnings coming. You got the catalyst to go with it. I think someone has it. COHU, another big AI winner right now on my list from my group. So this guy, big consolidation here, coming out over 50. That breakout is taking us to the first pit stop, 77, maybe a little bit more. This continues on to 90, and then you guessed it, 120 plus if this continues. Market cap here is 4 billion, a little bit smaller, but look into the stock if you want to read into something. On Semiconductor, am I good with the lightning rounds ad hoc?
We got a few more we gotta do.
All right. Well, I mean, I just want to know if you guys want to make money. Does the chat want to make money, or what do you want to do? I don't know. So on Semiconductor, this is a discount, man. So Synaptics on Semiconductor, to me, this is dumb. So on Semiconductor, there's a deal to buy Synaptics for $7 billion. Currently, that Synaptics is trading at a $4.5 billion market cap. The reason they're both down, unlike Iridium and Rocket Lab, is that because the deal was done as an all-stock acquisition, and on Semiconductor took it on the nose, both of these, Synaptics and on Semiconductor, because this Synaptics should now trade like a proxy to on, but I think on becomes the actual value play here. I mean, it's expensive, but it's not. You definitely want to be in here. This dropped heavily to $37 billion market cap, right into possibly a very, very interesting spot. 5 billion ACLS. I'll just scroll very quickly. Edge IP, SITM. If you don't know this one, definitely start looking into this. These are smaller cap names, but do you want alpha? This is the juju list that's going to get it done. 730s plus. If this gets through 8s, you're looking at a 1250 plus, $20 billion market cap stock. PWI, a little bit of a sleeper. We shall see. Amcor, we know the advanced packaging play. Big consolidation break, retest. We are still on way to 120. Biggest bottleneck in the group. Sanmina, IoT Edge, white fiber. That's Chris's. Entergys becomes the Apple kind of big play. This is looking hot. 157 break and hold from 2021. Large, massive consolidation. People don't know these stocks typically. 157 retest hold again right off of, I think that's Monday. ENTG. This looking good for 250 plus. Do you know what these? IMAX, this is, do you know any of these stocks?
No, I have no clue what these are.
Arteris, this actually to me goes hand in hand with Marvell. So they're actually neighbors. So we used to work with both of them back in the day. Look in this stock, again, IoT of things, Edge AI, Lattice Semiconductor, another Silicon Valley, LPFG type company. This type of company, Semiconductor here, you historically known low margins, not a lot, but the endpoints have have bottomed. So why some of these things, while they do have data center edge or data center builds, I think that the edge, client side edge, becomes like very much a real thing. Generac, big long. I would have. I almost picked Generac, Steve, instead of Nebius. The only reason I didn't pick Generac is because you threw the Nebius on there, but it replaced Generac. Nebius replaced Generac to me, but this is I think this is a heavy sleeper. Actually getting real deals, power storage behind the meter, very real thing. Click if you like it. E plus services. This is potentially one of those Rackspace deals. Rackspace 2.0. There's this and one more. If you guys don't know what Rackspace is, you can look it up. E plus is a it used to be a competitor of mine. Enterprise services and engineering solutions reseller. I saw MVT. This is good consolidation. I like MVT's spot right here, right now. I think Chris got this. I think this is going to be 200 plus, and he's got that imminent. Core, A10 Networks. Steve doesn't know about this company. He has no idea what it is. But look at this thing of beauty, Steve.
It is a thing of beauty.
Yeah. You know, you want another sleeper? FFIV. So these go into the Akamai kind of cohort of stocks. So Akamai, Fastly, CDNs. Another technology that comes with that is called load balancing. Load balancing. That is A10 Networks and F5. But these companies are sleepers when it comes to tech security. People don't know them as security companies, but they absolutely are. I think this Akamai pullback is a gift. I wasn't expecting to get this big of a gift, but yeah, I think here and I think we're good. There's more on the list, but I don't need to go through all of them.
So there's a couple others. If you could do them, Amazon, can you pull that one out?
Yeah.
How much longer do you want to go for? Let me ask you that.
No, I was trying to get through some good tickers for people to see like what's possibly popping off right now, so they can make some money, and then do the rest of your list, and then we can jump into whatever combos. But if you know, unless I see, let me see. Do you have any super chats that we need? I do. ServiceNow. We already did ServiceNow. We got ServiceNow.
We did ServiceNow.
Do you have any super chats we didn't get to?
Let's see.
Just so I just dropped some gems for the cruise though. I'm just saying. I think
No. So if you could, let's do Amazon and then roll into SoFi.
Okay. And we're saving Qualcomm for last.
Qualcomm last.
Ambarella. Oh, who dropped that gem? Oh, that dirty dog. I'm a little upset about this. This is edge like at its core. I don't know what happened to Ambarella today. Sorry, tangent. This freaking fracas. I was about to send a new trade on this. This thing was up 30% today. I'm upset. What happened? Rockets 32%. Rosenblatt sees pure play physical AI. I mean, what the hell? This is the kind of thing. If this is what made that stock go up, that's dumb. Rosenblatt, you were like a decade late on this. I don't understand. Maintain buy rating. Someone went heavy. This cannot be the reason. VP of business, no. Yeah, that was it was today. Something happened with Umbrella. It's not this. They are loading the boat. This is a 200. Yeah. Don't disagree. I'm a little upset about that. It's draftable, I think. Steve getting ready for his rotation stocks.
Listen, I like my portfolio the way it is.
Yeah. Amazon, I think, was a really solid pickup at 220s. 225. Actually, in a mid stream, we kind of outlined it. Very similar logic here, whereas like, okay, so the 220, again, just picking this up from like this high, you basically just connect the highs. You get a essentially a line, which is your at that time the prevailing downtrend, pushes through, extends through. It's nice. And you'd want it to hold like that, at least prior all-time high, but the second prior all-time high from here, but the second it doesn't, then you kind of know that you're going to go in for a bit of a pullback. So it's not, in this case, it's not a big pullback. You're really looking a beautiful retest, 225 of that broken downtrend. So that means it's holding the new trend, which is now up. And again, measuring from extreme lows here to extreme high here, actually, this is the ideal spot. So it has confluence. 225 is what we call like a 0.65, 65%. 65% retracement. 237 is exactly 50% retracement. That's what that 0.5 right here stands for, 0.5. This is, these are percentages also. But in this area, they call this area here, they call that the golden zone right there. That's what some traders, institutional type people, will call this area is the golden zone. In terms of if you're looking for a pullback, you know, that's ideally what you're looking for. Me personally, we like a little bit more edge in our trades, so we do something right over here where this lower piece right in here, that's actually called a golden pocket, and that is 65.65%. And that gives you a much better edge. But look at how you snipe things like that. So beautiful, right on. And I get confluence, right? So from here, what needs to happen is that we are actually battling heavily this prior resistance area, all these red, whatever. So from here, this needs to get through prior all-time high. And if so, then yeah, then we see 260 and ultimately 250, and you're on your way. So this is good. It's pathing, and it's like the order of operations. Your resistance is 260s. So up in here, you can at that point get a pullback like that, which is fine, and then you get a little bit more like that, and then eventually you want to see this go up that way. And so, we're on step one. We want to see it hold. Then we want to get to step two. Then we'll have some kind of a pullback. And then this piece is important, that this high in this area is higher than this one. So that will take us to 4. And then ultimately the promised land where Steve is looking for $400 stock.
Is it a $400 stock though?
$386.52. What is that? Whoa. 5 trillion? He goes, whoa. Yeah, so like it's pretty straightforward. So like if this is the consolidation, so let's say all that happens, right? Let's say all that happens and you're up here, and then all of a sudden we're talking about a breakout of this consolidation area. What this is you double that consolidation, that immediately takes you to 330. On the most powerful breaks, you can triple that. And that is exactly how you get to 386.52. But there are stops along the way. And so like those are, this is why people call this like, what do they call it? Astrology for men. Astrology for men. So forecasting that far out is not typical. It is something that I do. But with the caveat of you have to hold the levels as you go. And, that becomes very much a momentum trade.
All right. Before we get to the next one, if you're enjoying the information, please go like and subscribe to Jason and like and subscribe to me. Jason, the next one is a company I own a lot of also. SoFi.
SoFi is good. SoFi is very good. I'm not even looking at it. It's building its base. So like this when does SoFi have earnings? Again, everybody's got the pre-earnings run right now.
3.5 weeks.
Yeah. All right. SoFi down 30, 40, I don't know how much percent off the highs. 50% off the highs. Are you really selling it ahead of earnings right now?
No.
It's 40%. It's more than 40% off the highs right now. I think that would be a foolish move, potentially. And so the only thing that's going on with SoFi right now, same thing with Robinhood, is that they're just not the shiniest rock in the pond. That's probably a dumb analogy. It's just not the shiniest thing out there. Are they good companies? Absolutely yes, right? And will they probably surprise on earnings? Very likely. Do the stocks get like, okay, so over 1850, this is what the biggest piece. So right here, that's those big sellers. You have a small little pivot here, and where a lot of the selling happens in this area. Also, mind you, look at the right-hand side, you see this volume by price. So volume by price, you have most of that showing up right here, and it's holding that whole area. I just kind of pointed out this one spot. You're coming up to it real quickly. That's that last, again, if this is, the one mountain, this is the outskirts of the city center at the top of the mountain. If it's over 1850, you have a very quick shot to whatever this is, which 21. It's just a small pivot here. I think that could get to 2150 before earnings on a squeeze, which this looks like it's preparing to squeeze. So this looks like it's preparing to have a pre-earnings move of about 20%. That's going to take it probably around the 200-day simple moving average, which is that red line on my screen right here. And from there, I think that's about sideways. So then you'll have earnings, and you'll probably have some kind of pullback. This little pullback, if you've been paying attention, hopefully you can say from here to whatever that is, you can find that 50% range, and that should land you somewhere around here, 20. Just prognosticating right now. So get us up to there, pull back about 50%, maybe is slightly higher. Yeah, this looks like the pathing to me is about like that. And I have this big mountain range, two shots. So 2150 to 25, it can get there. If it gets to 25, I don't know, but it's like that. That is resistance. I think that might take it through the year though. Because this is setting up where essentially this your 200-day simple moving average, it's going to come in like that. If you're good, your 50-day simple is going to come in something like that, and then I'm just going to do yellow for the 20-day, and the 20-day is going to look like probably like that. And so it's not till the end of the year that this gets like really squeezy, and the setup becomes very parabolic. What I mean by that is we look like we are in this scenario. We look like we're repeating this one more time, almost picture perfect here, over here. And so that is what's happening. It's a process. It's not an event. And I know I'm over time, but I'll just show you guys what I'm talking about in all these extensions. So remember, if this is the consolidation, right? That whole exercise I just did, been doing since the new channel. It looks like this. These are measured moves. Again, male astrology here. Welcome to the show. We're going to take that consolidation here and essentially double it right there. That's how you get to 28 instantly. And then if it continues, see how momentum, it stays on each line. Then it could have gone to 38 if it tripled. But as this went, and I'm going to take this around, see how these lines exist? It needed to hold here, had to hold. Then it had to hold here, like it had to hold here. And every time it didn't, essentially what happens, you have hold, hold, You have targets up here. If you can't hold a level, essentially, you lose it here. You go down to the next one, which is over here. And every time it lost it, it went there. Every time it lost, it went there. And until it broke out of that range, okay, you're going down here, which only one time, but you're going down to this level, which is what? That is the same as that, right? And you lose it again, you're going down here. It's tech. This is technical analysis right here, right now. That's how it works. So from here, you've held that kind of like 50% point, and I think you want to see it get through that 1850 spot. And if so, then I just gave you the pathing. It's still decent. I think it looks pretty good. I think it just, you don't expect that this one's going to happen and hold. I think it's a bigger process, and I think that process is going to look very much like this, except that I think we're closer to the bottom. I hope we're closer to the bottom than the top. All right.
All right. Zeta Global.
I knew you were going to say that one. I had a feeling that was coming. Zeta very.
What's on the sheet?
Did you send me the sheet?
Did I send you the sheet?
I mean, I asked you to send
Connie
me.
have it.
Connie, yeah, my Thinkorswim died. I need to shut that down real quick. I hate it when it freezes after hours. Oh, Connie got it for me. Thank you. We are in Le Sheet. Oh, I can do this. Done. ASML done. AMD done. I think we're good. We got all the big ones.
So let's do Zeta, then we'll do Qualcomm.
Yeah, I don't know why you have a lot of sound hounds.
So do sound hound.
No, I mean, no, but not many Neviuses. Nevius looks great. Nevius. DRAM is going up. Enphase is super interesting. Zeta is like a hold. So I think this is pause mode until you get to earnings. It could get another bounce. And where we are, I think it's not in a breakout spot. I think your resistance is more in like that 22 area right over here, which we kind of seen before. So on this one, I'm thinking you could see if this is over 20. So see this big right-hand side, like the right-hand side of my screen, that's heavy volume, right? And so in this instance, that volume is acting as support. Like you can see it down here where that support is, which is a higher low. It's kind of grinding higher. I think this is one you kind of like take it slow. It could get to 23 before earnings, but I don't know that that's necessarily like a thing. But as long as for the next few months, and I mean few months, as long as Zeta is holding over that $19 range, so just look at this. This becomes pretty legit, pretty bullish. 28 is your upside resistance. And so if that can get through that, which is very far away from here, then you're on 34s, right? And then you have that type of trajectory. But the key here is that this holds right here, right now. So far it is, right? But after earnings. So I think you could get something like a small pop. The setup is that you could get a small pop on earnings, but it may or may not hold. That doesn't matter for the broad, like larger picture. The larger picture is just that this holds for a while and lets these SMAs like kind of like catch up to itself. And ultimately, maybe you'll see it better here, and ultimately resolve itself higher. But this setup is one that could, should, and would take time. So this is more of a own it, don't trade it setup. Hopefully that works for you. but that is what it is. If you want to do sound, I don't know, S-O-U-N. S-O-U-N. I don't know about this. This one looks like, yeah, it's not bad, actually. This one looks like it's squeezy, but I don't know how real this. Yeah, $5 support. I think you're close to it. That could be a 50% quick trader. I don't think they're doing more than that. But this uptrend is definitely broken. And it's not a good look. So top to 8s, mid 8s. That one.
RSB Frank, we did RDW at 5750 timestamp.
Shine, if you're asking about SoundHound, I don't know. Appreciate it, Rexy. I don't know. So from a technical perspective, so what technicals are is that they're a short-term representation of the majority of investors' emotions. In the easiest way for me to explain it. That said, they do represent what's known. I do believe that they represent what's known about any given stock at any given time. So if you have a thesis on a company, let's say like a SoundHound, all I can tell you is that the market doesn't view your thesis right now. So either you have an edge or you're missing something, one of the two. And that's in Raw's form. That's what the chart should tell you. And I think this is a good one where, like, if the fundamental story, let's say by way of headline or something like that, were to change on a company like SoundHound, instantly this probably goes to it will probably reclaim this broken downtrend, right? Which or at least retest it. That's what the chart would say, is that it should at least test it. Now from 6 or whatever to 12, that is in fact a double. It still doesn't mean that we're out of the weeds. But yeah, that is what you would expect to see. I think resistance, if that did happen, it would be 1, 2 fold into 18s. But that is not something I see happening on the chart here now. But I think that's why you would watch it to say, okay, maybe I have an idea of what could happen here, but I don't want to be the only one with that idea. I want to have the market agree with me also. So when it's over, essentially, like these prior lows, minimum this area here, call it, what is that? 8s, over 8s. Okay, cool. Then I think that becomes actually potentially more interesting. Then you have something like this. So, but it would have to get a little bit heavier, nicer, like more. I need to see more.
All right, Jason, the last one before we do Qualcomm, GLD.
We're not doing golds.
Why not?
Why would we do gold?
Because the super chat came in for it.
Okay, we will do gold. So before we do the last before the last. Really?
I think so.
Dude, you guys all rock. I got a red wire from Frank.
That's why I said from Frank that we did at 58, et cetera, et cetera.
Gold is on yours.
Okay.
But we love the support though.
Yes.
I did see someone do some Nebius. This looks kind of juicy. So I took this Nebius this morning, and I was looking at it yesterday. We're doing the same thing. So it's pretty basic. Like, yes, it's a channel up. That's great. But we're looking at this general consolidation. If which was from this kind of breakout level here. So that created this consolidation here. And I think coming back over 250s, this becomes this move, which could shoot this into the 330s. That's hot. I think, that would be the next move. That's 20% before earnings, which is late August. And if it does fully break out, this could be 350s or so, 365. But $400, a 400 handle on this by end of year, I think is more than reasonable. This has room. It doesn't seem like it because it seems like it's come a long ways, but at 69 billion, I think it has runway still. Who actually requested gold? Somebody did request gold.
So yeah, that's what Chels and Connie said.
Chels is messing with you.
No, she's legitimately not.
Chels,
she's not.
I think you take gold. So the first view I do, and I'm going to move this off. So this is more conceptual. Every day when I come into the market, I have like these 8 charts really. Top 4 are SPY, Qs, diamonds, and the redheaded stepchild of the market, IWM. On the bottom though, you're going to see what I would call like barometer stocks. So DXY is the dollar weighted index. It's the dollar weighted against a basket of other currencies, then gold, then Bitcoin. This is my risk on, risk off, and then crude oil futures. So between these 8 kind of stocks, this will give you actually a very good view of what's going on in the market, whether or not you should assume that we're risk on or risk off. The reason I do this is because gold and the dollar typically have an inverse relationship, meaning like when the dollar goes up, typically gold goes down, right? And when the dollar goes down, typically gold goes up because the dollar denominated assets, meaning like it requires more or less dollars to buy the same amount of gold. Somewhat similar to Bitcoin, and they do have a relationship. Actually, I would say that the Bitcoin relationship to the dollar is significantly heavier than people understand. Probably very weighted to the dollar. But all that said, I think where we're coming in on the Dixie, this is very important. So this is like from inception, we're at a huge pivot, and I think from here, if the dollar does go up more, then keep that in mind for gold. It's not going to be good. It's more like a headwind. But I do think that at least the dollar comes back, retest that $100 pivot or 100. It's not it's just 100 pivot, like right in this area here. I will give you one more on gold, and there's something called GVZ is GZV. Oh my God, gold volatility. Tell me. All. GVZ. I knew I had it right. GVZ is the gold volatility index. Gold has an inverse relationship with vol, as opposed to stocks. We're like, this is if the VIX is high, then you assume that stocks are low. On gold, it has its own volatility index. It's the polar opposite. And you could track this, but when volatility goes up on the gold vol index, gold also goes up. Right now, we're not seeing that. These little spurts on the vol index, those are actually upside because of the way that its relationship with gold. So vol coming down, it's closer to the bottom, but I think if you were to set like an alert on GVZ somewhere around 25, 26 bucks, to get pinged, I think that will serve you well. The gold, the asset, no, this looks like it's coming in for more of a bit of a rest period. It can come. We don't want to see this. We probably want to see gold futures back into 35s, but it's not. This looks heavy, and I think this is more of like, are we consolidating here? At this spot, do we consolidate or do we take that second leg back down to 34 and retest this this general area there. I think a lot of that has to do with rates, has to do with which in turn have to do with the dollar, and all those things. So not to get super technical on you, but I think that's gold. So it's a spot, but I don't see anything happening yet.
All right, Jason, before we get to Qualcomm, the list is closed, everybody, but we did have one more super. Can you please do ABCL and close?
Mikey. I don't hate ABCL. There are a lot of biotechs that as a sector are looking very, very good. So these are the hardest stocks to trade in the market to me. She looks like she's consolidated something, meaning something has to be happening. There's a ton of M&A across the board. In stuff like this, I don't think you can actually look at these. Let me make sure I have. Is this the right ABCL? Would be the first question. And I can say that you could take it from here. So right here, this spot on this guy, extreme high to extreme low. What we're doing is we're kind of just measuring where the pivots are, right? And so this is, see that 0.5? That is 50% measured from high to low. That's exactly what we consider like resistance. If this gets any higher, then you're seeing like a 1030, 1040 level. And it kind of works like step by step. You're into this. Probably not quite 14, but you usually have something that we call this a fair value. Meaning like if I were to turn that volume profile on, you're probably going to see a big empty spot of volume right around there. But this is the trajectory that it's on right now. In the meantime, if this hits resistance, a pullback is actually going to take you right into the sub 5, mid 4s area right here. That would be resistance. But I'm not sure, not knowing exactly what they're doing and why. Short interest, is it something? I don't know if it's news. Multi-specific T cell antibodies for, okay, so this gastrointestinal cancer thing is a thing right now. It would be really nice to cure cancer. I'm gonna do this, Steve. Am I gonna get in trouble?
For what?
If I say a stock that might have cured cancer?
Tell us.
Well, you have it. I sent it to you a long time ago.
What is it?
RVMD. Yeah, but there's like some kind of breakthrough, I guess. I liked it. I like the idea of it. It's hot. I don't know. What is $40 billion? So could there be another? Yeah, there could be. But they had a breakthrough. Raz. I'm not a biotech guy. My biotech quant, if he's in the chat, he can say something. But yeah, pancreatic cancer, man. This is the one that got a standing ovation when he was doing twice. I think they got standing ovations when they're doing their presentations. But there's some cool stuff happening in this area. Again, not a biotech guy, but interesting enough to know that there's something going on in the space. Oh, and then Clover Health. Is that what he said?
Clover Health.
Clover Health. Wow. Why does Clover Health look like it's going higher? I see AI solving cancer within 5. I mean, that would be amazing. But you guys, these are super speculative. You have to do your own due diligence. And they are literally the hardest stocks to, my first loss comes from those. You think you're doing well, and then something ends up being a sell the news, and they need to raise a bunch of money for more research, and you're like, oh, okay, well, I support that, and then it just keeps going down and down. I don't know. Clover Health, man, has broken this area here. Support was over here, so this is 487. If it can hold that, it's on trajectory for 7 and potentially 8s. Potentially, and that's again doing the same exercise, doubling from here to there if it can. But there's earnings, so this is definitely a earnings run up. The way this works, flip side, if it doesn't, and let's say it does this, you're coming down to 3.5, potentially 3.25, and you're coming into that, and you must hold. That's support, right? Because if not, then you go all the way down. But it looks like that. So either here, that's pathing. Cliff holding June. What? Speaking of Cliff, I like this stock. Can we go dumpster diving?
You could. We got one. Guys, it is closed, but I will ask Jason to do me one more favor. Mentality. Longtime watcher of the channel. Peng. Don't even know what this is. Sounds familiar.
I know Ping. It's PENG, right? Yeah.
Yes.
What? So if you were just to take an honest assessment really quick, what would you say?
I would say that this looks like it's going to fall.
Why?
Because nothing goes straight up like that.
Okay. Well, so the TA today is down. I don't know. I think that's the bigger question. This is extreme. Well, it's not that bad. So 3 billion. It's holding trend. So when you have a stock like this, it's super important to know that it's momentum, right? It's a $4 billion market cap. That's fine. Momentum looks like this. You know, you have a consolidation. Meaning you have a pullback like that, right? That's the first step one, right? Pullback, and then step two is you find a bottom, and then you retest the highs. It's not an instant thing, right? That retest usually takes a little bit of a stutter step, and you kind of want to see it break and hold, and you can find it exactly right there. And again, if we're just talking consolidation from here, you see how like they'd be like, oh, it starts to work. It starts to work here, and you're triple. That's just on a very small time frame. This is a 3-hour chart. It works on all time frames, all the time. But we're doing it again right now. So if this were to get through, again, earnings fundamentals are greater than technicals. So when it comes to something like earnings here on the 7th, which is like next week, I think I said this earlier, but a lot of this is like pre-earnings run up. Can this get to 85? Yeah, for sure. And then if it holds this, then can it get to 90 here? Yeah, for sure. It's right there. It's on the charts. There's no denying it at all. But if it gets to 90, if this is sitting at 90 on earnings, what is that going to tell you? So that's going to tell you that there's a lot of good news baked in the price already. And in order to hold momentum, it has to deliver on said good news. And that's where things can go sideways, like real bad on earnings. So you just want to be careful about that. There is no pullback to be had here. I mean, I guess at most it would be 67 right here. And this is now entering into like a momentum trade. So while 67 is support here, ideally 73 is all you get. But if that does turn into 67, that is something people are familiar with, a setup that some people are familiar with, and you could do, that's how that would work. That said, they're going to have to deliver on earnings. I don't know if they just updated their earnings or not. Why is this a strong buy? Is this cheap? I have no idea.
All right. Jason, wow me with your fundamental research that you did. I think it's that time.
Oh, I didn't do any.
What do you mean?
What do you mean?
On Qualcomm, you said you're going to hit me with the fundamentals.
No, you said you were going to do a deep dive, which means that you already had a lot of stuff ready.
I do have everything ready.
Oh, let's go. It's your show.
You made it seem like you were coming at me with fundamentals. I got excited for a moment.
No, I'm gonna hit you with them as we go.
So you do your TA, and then I will hit you with the fundamentals.
I like this considerably. I think. See, I don't know if you notice, like every now and then, most of the time, I'll spout a little something that might sound like nonsense, but it's a backstory about a stock. From this stock's perspective, we have one consolidation here. By the way, this is 20 years ago. This is a cell phone company stock. To me, this is Marvell 2.0. Easy day. Easy day, which means that you also have to be patient to me. So on Qualcomm, I call it Qualcomm because I don't know. It just looks like
Qualcomm.
It looks like quail. You ever seen Doug? The quail.
No.
Quail man.
Quail.
This is Qualcomm. This is Qualcomm's mascot. So this pullback retest, that's 2023. This is all like, Apple, their kind of cell phone modem going well. And I think actually a cyclical business, I'm going to do this one more time, retest of this top end of support. So this, by the way, is 2022 right here. Still a cell phone chip maker for modems. Biggest partner being Apple. I think over here, this is all probably possibly attributed to Apple. What I can say from an industry perspective is that space, as we went through the charts today, you may or may not have seen, at least in this setup and a lot of other things, all of these have something in common. If you didn't know, you'd have to look into that. And a lot of that is the edge, AI edge. And so Qualcomm is to me decidedly one of the biggest plays in that space. Yeah, it's a big market cap. This is 200 billion. So it's, from that perspective, it's heavy. But with the concept of like in 2021, this is a cell phone company. In 2024, this is a cell phone company. Yeah, they didn't pull through here, losing Apple contracts. Right around this area here, they talk about a product called an AI 200. And then they get a deal with this entity called Humane, which is like governed by Saudi Arabia or whatever. And it is for a data center product that's completely different. So for Qualcomm, the company, it's a different company. And I think that's really the bet. The chip specifically to Qualcomm, in this situation, I think the old modem stuff, while they have the premium seat, it's not the biggest in the market, but it's probably the best high end, probably one of the biggest footprints out there with Snapdragon and stuff. Gives them like the ability to, it's a re-rate story, plus it's a story about a business unit or two or three that do not exist on the balance sheet today that they're talking about and getting deals for today. And I think that is the edge. So this is the whole consolidation that I'm looking at, like right here. My entry is actually like right over here. But even if I were to run the same playbook that we've been running all of this, to me, this is just one initial target with a retest being in here, potentially doing something like that. But this takes me to 400 plus, actually. If they, from a technical perspective, I can layer this on to say, okay, if we can get out of this consolidation, which is about 220, we'll take this down and say this is another one here that we're dealing with. So 230 is the pivot, by the way. Oops. There's your 450. I think you don't cap this because I really think this is Marvell 2.0. And this piece right here, which was 20, I think this is what, 2024 all-time high, becomes like the biggest pivot, which it did lose just recently, but it's coming into now support right in this 175 area. So let me turn my volume profile on one more time. Again, where we can see like the majority of this has traded. I think this is like Marvell in the $70, $80 range. And this is like Marvell in the $100 range. So yeah, probably choppy. But net technically, as long as this can hold this general, call it between these two highs, 160, let's go a little, I would want to give this a little bit more, somewhere around 160, between 175, 160. This still sets up for the beginnings of a pretty parabolic move on the charts. So that's where I'm at. Cheap historically right now. Cool. Now you go.
So Qualcomm against AMD and Marvell to start with. Okay.
Qualcomm today?
Just on the trailing 12, on the fundamentals. Okay.
Okay.
I can add in Broadcom and Nvidia, but they're such larger companies. I mean, Marvell is probably the best one because AMD is so much bigger. It's almost $1 trillion, but you know what? We'll roll with it. So on a trailing PE, Qualcomm trades at 20 times trailing, 17 times forward. Way better. We'll get into those. Okay. What I want to see from a fundamental standpoint, first, who generates more profitability, more revenue? Qualcomm does more revenue than both of them.
Today.
More profitability today on a trailing 12. They do more revenue than AMD, more profitability, way more profitability. EBITDA $13 billion versus 7.4 for AMD and 2.7 for Marvell. Marvell is a larger company by market cap, yet it does a quarter of the EBITDA and
reason for that, yeah,
6 to the operating income. So if we look at what we're paying, look at what we're paying. 14.8 times EBITDA, 17.2 times operating income, 13.6 times cash from operations. You're paying 97 times for AMD, 127 times for Marvell. Price to free cash flow, AMD and Marvell traded over 100 times free cash flow. Qualcomm trades at 15.6 times.
Yeah.
Crazy valuation.
So I think that's kind of like why I was pointing out cell phone stock. But
here's the big thing.
It trades at a cell phone stock chip modem valuation.
It's not believing what their CEO just said. So
100%.
Did you listen to Investor Day?
Oh, dude, I'm all over Investor Day.
Okay. So like,
so like absolutely yes. Which Investor Day was way more bullish than I ever had.
Crazy.
Like the crew should know, like I've been on this Qualcomm for a while, but I had the AI 200, I had the AI 250, potentially an AI 300, which the AI 200 was pulled into this calendar year, shipping right here, right now, which is about to be the earnings coming up. I did not have a C1000 on my roadmap. Which is CPUs. I had rack scale, but I think where you're going is how I fundamentally get to the technical levels, which is the beginnings of the re-rate.
Where I'm going is they initially were a cell phone with all the CDMA technology, 3G, 4G, 5G.
Bingo. Okay. Which is bottom and now profitable finally.
Now they're shifting from cell phones / smartphones to all edge devices, auto, PC, wearables, and industrial. But the big thing, 3 pillars for the next 5 years: build a data center platform, become a full stack player in physical AI across automotive, industrial, networking, and robotics, then move from selling silicon to selling fully integrated platform solutions with a developer first mindset. If they can pull this off,
it's gross.
If they can pull this off, the market right now on a forward basis, I put Qualcomm twice. I did not mean, I meant to put Nvidia in here.
So here's where like our fundamental looks differ, right? So to me, this re-rate that you're talking about is a given. Like that, and that's the base bull case, and that takes you to what do you have on your spreadsheet?
Hold on.
If it re-rates, where I would go on this and would be even more is like that's if they don't grow, and and trailing 12 months is a pretty deceitful metric, especially when you're talking about a company that's transforming. Here,
Why is it coming up twice?
Share my screen for a second while you're looking at yours.
Hold on. Okay. Marvell.
Hey guys, it's a $1 trillion market cap. $1 trillion company, baby.
So if we look at the forward PE, Qualcomm is trading at 14 times forward, and the market is barely pricing in any growth over the next 2 years. They're pricing in 22% growth.
Yeah, none. So there's a disconnect, right? Between
huge disconnect. So if they can pull off what they are saying that they're going to do, which they have the cash flow to do,
correct,
this could be a 4 or 5x. Like that's the biggest thing. And that's why I showed the free cash flow in EBITDA.
So you're not including growth
way more than everybody else, or AMD and Marvell. This could easily be 60-80% EPS growth over the next 2 years.
Can you highlight what AJ just said?
Who just said?
AJ.
At what time?
Just now. I see it 3:39 p.m. Yeah. So the story starts in 2029. I don't think so. The market is a forward-looking vehicle. Decisively, the market looks forward today, 2 years forward. So 2029 is actually a very important kind of pivot. That means that like between now and next year, 2027, like it's going to start really, really happening. It's not just that. I think if you share my screen really quick, this is from their kind of deck. This is just handset revenue, mind you, that from like the AI stuff, they're adding. So Qualcomm was a 24 billion 2026. I think this is FY 29. Fiscal 29 is I think 28. So which means that the inflection point is now. Was a $24 billion estimate. One line item, one line of business is simply added just by this one piece, which is again not handsets. Brand new line of business, not handsets. On top of handsets, that's going up additionally, right? So I think these two things, what you're talking about here, there's so much more stuff. I had to pull it up while you're finding your stuff.
Their investor day was insane.
It was gross. So not only was it the AI 250, 300 kind of, sorry, I don't want to jump around too much. I got to find the thing. I had the data center play already, right? And when we talk about data center, we're talking about rack scale data center, literally the rack. So this is, I think this is it. I think this is the AI 250 to 300 kind of thing, but they're talking about rack scale stuff using Dragonfly, which is like their edge, because they have this huge, NVIDIA, Jensen talks about the moat for NVIDIA initially being like the install base. If I just looked at this from that perspective, when we go from connecting the data center to the edge, Qualcomm has the moat. They have the install base. NVIDIA is going there. There it is. AI 200, AI 250. They brought out AI 300. The issue, the thing about this is that they already have customers, but they've had customers they have one customer that's like the market doesn't really believe it. So what's happening, I think, is that this is an execution risk situation. where the goals are probably almost so lofty they're incomprehensible for the market to digest, which means that it becomes an execution risk situation. And that, I think, to me, that creates both the opportunity and establishes the risk. But at this level right here, right now, to Steve's point, I think that this is very much worth the risk, because if you just on this one product line alone, and we're not even talking about the multiple layers of other products that they announced, which was just disgusting. If Qualcomm can get their revenue to be like 50% data center, that data center revenue, as Steve was just showing, carries a much higher multiple than cell phone company type revenue. And when you blend that together, the old revenue starts to re-rate as well, which the old revenue to me, not only the old revenue to me is it's also bottomed. So if you listen to investor calls across the industry, the edge stuff like the LP, like Lattice and all the other very what used to be cheap on semiconductor type stuff, Texas Instruments, you look at these stocks, there's a reason that these stocks that were cheap before, they're not all just in the data center. It's the AI on your device kind of thing. That whole industry is also bottomed. And they've been very plain to say it. Actually, I think Qualcomm said 3 quarters ago that the cell phone industry had bottomed as well and is going nowhere but up. And I think that in addition to this kind of creates like a pretty unique inflection point. But again, high risk in terms of execution, and why I feel like this is Marvell 2.0. I had the same thesis on Marvell, like over here, like all of this, Marvell was still doing the same thing. And yeah, it was like, it was a hard road. Like you would go from like 50 to 80, pull back, and then you have this massive move, and then it pulls it all back. And eventually finally takes off. By the way, this whole situation, even from here, I think it was this one actually, not even that, just this from 2025. It's all this, my bad, wrong chart. It was this, in this area, this is where their custom silicon, like all of this, Marvell had custom silicon. It was already part of the story. And then Liberation Day hit, all this, that, and the other, all of this chop, it was already there. It wasn't until like this big inflection point where like, okay, we have real customers that are already like, it's just increase. I think it was this earnings call. I don't even remember what it was, but it was already ramping. I think that business unit, custom silicon over here, was like $500 million or something. Steve, you could probably correct me, on their balance sheet. It was a peanut, a speckle on an existing company that was actually doing something very similar at this point in time. Marvell was like it had a lot of car type stuff, but they had made a big shift. They had already made the shift to data center custom silicon, and that shift, and they were selling off other less profitable business units. But it took a long time. I think that whole, from a stock price perspective, that's better part of a year. But my God, that was worth it, right? So here we are, Qualcomm, to me, doing the exact same thing one more time. Yeah, this holding in this area, I think, not only do they still have the edge pieces, but they also have now what could potentially re-rate them. They bought a company called Modular right here, which is I'll back up a little bit. I think when you look at the market, there was one, and you look at my stock draft, what you may not know or notice is that, like, I didn't draft any mega caps. But like, part of the core belief to me right now is that as a business, if you're looking, let's say I have to build AI, right? My business needs AI to survive. At the boardroom level, and why we're all, I think, so bullish in general, is that this AI build out, it is not optional. And like, why, it doesn't matter what the bear case scenario is. At the boardroom level, it is evolve or die. There is no option. Like, these CEOs will lose their jobs. These companies will die if they do not evolve right now. And so that creates an issue, a pretty unique one, whereas like we see Nvidia is booked out for multiple years on end. Micron's booked out for multiple years on end. Everyone's booked out for multiple years on end for this AI build up. But for a minute, pretend that you're the company that needs to build that out. I need to go to my vendor to buy my AI widgets.
Jason, let me ask you this. Do you see anything that's indicating that people are leaving NVIDIA?
It's not about that. So I'm almost done. So like if I'm the business and I need to buy my AI widgets, my preferred vendor is sold out. I can't do it. They can't get it to me. I have to get them. Doesn't matter. That guy who I used to buy from charges an arm and a leg now because he's got a throttle demand. What do? I go to the next tier vendor of my list. I just go down one rung. And if they're sold out, I go down one more rung. And so I think that leaves the opening. The solution is more production, period, end of story. The bigs are capped at production. They're at full capacity, end of story. They can try to build more capacity, but there are other companies today that exist right here, right now, that have the potential to build that capacity, i.e. global foundries. But that is actually, if you go into this, like Qualcomm's base case on what the market opportunity is and what's driving their transformation, is that there's clearly an issue with the market and somebody needs to step their game up. And right now, Qualcomm has the means and the ability to do exactly that. So that's what they're doing. And I think when you look at it that way, it's like, okay, yeah, they're not necessarily trying to be the next NVIDIA, but an investment in a company like Modular gives them the software moat to connect both the data center and the client side edge together so that they can speak to each other, which doesn't have to be like competitive, but it's complementary. It's another way to get through that. It's the demand throughout the industry that's, then you go to a CPU and you're like, what? A CPU. All of this, I think I skipped over it pretty quickly. All of this starting to, one of their biggest thing is like their CPU, their architecture is stacking chips on top of each other so that the memory is closest, so they don't have the power constraints. I think that's why Zuck said he went with Qualcomm, which is, when they say multi-generational, that's years. That's very sticky. But anyways, I think they're going along the road of, listen, the market demand is not changing, but everybody's completely maxed out. So somebody has to pick up the slack. And that's why we're seeing those small and mid-cap names do what they do, because yeah, there is capacity out there that's readily available. Just like in wartime, Ford would shift from selling cars to making tank engines. I don't think it's any different than that right here, right now. And I think that's what we're seeing across the market. Why we're seeing IWM making higher highs and outperforming the Qs. Why we're seeing diamonds do the same thing. It's all for this underlying like thesis to me. But anyways.
Are you seeing any indication that there are companies canceling orders, or the demand is not 3 to 5 years out, and that companies are trying to leave NVIDIA?
No. Like, am I hearing that?
Are you seeing that anywhere?
Leave NVIDIA?
Yeah.
No.
To try, because they're
getting laid off from Salesforce, ServiceNow, and all the SaaS apocalypse. That's real. Like, that's real. They're all getting laid off. No. I'm talking about customers leaving NVIDIA for TPUs. Are you seeing that? No, I'm not. I'm not even saying that though either.
No, I'm not saying you are. I'm asking a question. I'm asking if you are seeing in research that you do that companies are canceling orders with NVIDIA because they don't want to pay Jensen 85% margins and they're looking for custom TPUs instead.
No, I don't even think that's possible right now, because like Microsoft's not selling Saya. I don't know, not Maya. I don't know how readily available Tritium is or Google TPU. No, I think the idea is that they could be cheaper, but those hyperscalers, I think, are using it for them. And the initial use case was like internally. So not too dissimilar to how the clouds became a thing from the beginning, is that I think those custom ASICs were designed for the companies, AWS, Azure, GCP, selfishly to drive down internal costs, ended up potentially saving them some money. So they end up making them an available product to the public, which I don't know how prevalent that actually is to your question today. But I know that they're saying drives down their internal costs, which was the biggest driver.
Right. We'll end it out there.
Oh, no.
No.
Wait, what was so that was just my general thesis, where, why, how, but we didn't finish yours. Was yours the re-rate? They're cheap as hell.
So
they're cheap as hell.
From a capital standpoint, Qualcomm does too much profitability to be trading at this valuation, sub 250 billion market cap. It trades at less than 20 times free cash flow and EBITDA. Absolutely insane. The market is probably wrong on the forward earnings. Forward earnings probably pick up at 28 and 29, and I think it gets re-rated next year. I think you still got time, and I think that this could be anywhere from 500 billion to $1 trillion company in 2029.
Yeah, and I think you have to look at it that way.
Yeah.
I think one on my end was like, is Qualcomm feasible before earnings? No, I don't think so. Right, earnings is just literally 5 days from now. I think that you're at support on Qualcomm technically. What I will say is that you have a very. So I think the question is like, if the investor day was so bullish, why is the stock not going higher, right? And I think that's a very fair question.
No, it's because they don't have keys into the AI revolution right now like everybody else. They don't have GPUs, they don't have TPUs, they don't have memory. They're just not in it right now. Yeah. And Edge AI was supposed to be this huge thing, Internet of Things, that never happened.
Well, yeah, so I believe that it's happening. Now is the time.
Yeah, but think about when they actually came out with Internet of Things. That was like
IoT
eight years ago.
Yeah, like, for sure. Or like 5G. It was a thing, right? But like, was it as profitable as they all thought? I think that's the question. I think one added nuance to that is that the modular acquisition is expensive. I don't know that is the only acquisition that they're going to do. I'm pretty sure that they're going to be doing more acquisitions as well. This is a very bearish setup near term, which can take you to that like 160 type range right in here. But I think before earnings, this ends up failing. Near term, you could probably see 170s. And if it does bottom out there, I don't know that 250 is available. I actually have something really like this that's about 230 before earnings, literally just like that. So I'm very close to the lows that I'm looking for a larger ad. I'm not quite there yet. I want to see this bearish pattern fail. And I think with the catalyst on deck very soon, it's very close. Very, very close. I think, technically, if I took from this inception, from that pivot low to right here, and I take some of these other lines off just so you're not confused by them, look at this. So this is exactly the order of operation that we do. Okay, you've pulled back. Why? Number one, this event is clearly a sell the news event, right? Number two, it's an execution risk. Qualcomm's been talking about this AI 200 product for actually better part of a year. Now they're ramping the whole thing up and they're spending money to go towards it. I think if you see it in this, I think right here, right now, I like it a lot. I very nearly added at the close. But if I see this, or if I see more like over 190 here, that to me is the point where like we're done going down over 190. We're done going down, and we should get closer to this 230. Is it 250? No. And I think that this sell the news event is over near term. It ends up being a buy the dip. rips up into earnings, and then again, it's a show me story as we get to earnings. If this is decidedly over that 230 point, right? That's the 2024 high. Anything below 230 to me, we're looking at a cell phone company, and the bet becomes asymmetric that either, this is a cell phone company that's now spending a bunch of funny money to go after a shiny object that they cannot attain, or this is going to re-rate the entire stock and potentially bring it into that multi-bagger a few years down the road. So yeah, I think this pullback is the opportunity, like, end of story to me. So I like it for all the reasons you said. I think it's almost de-risked because of that valuation piece, but the upside is potentially incomprehensible for the market.
Yeah. Oh, all right. SpaceX, how you feeling on that? Let's end on that one, since Maddie
didn't SpaceX have, Maddie said SpaceX had, if it was over 170, I didn't, my, if it was over what's the, do you know the level?
Do I have a level on SpaceX?
No. There is a mark. I think if SpaceX trades over 175 for 5 days on average, is that it? Then another tranche of.
I actually don't know what it is. I know that the employee lockup is in August, and a lot of brokerages had either 15 or 30 days if you got allocated shares.
Yeah,
we just hit the 15-day mark, or we're hitting it this week.
Yeah. So we have 1, 2, 3. Okay, I think it's 5 days. If it's 5 days over 175, I think another tranche of shares gets released automatically by design. Someone can quote me on that, because I remember Maddie saying, he's like, dude, they missed it by 1 day. He's like, one more day over 175, we would have had a whole ton of shares released.
Yeah.
So there's that. There's also, I don't know that you're selling, but this is the first day of trades range. Literally held it at the very bottom, which is perfect. Typically what you'd want to see like this, and this becomes like the general range here. So 176 is kind of what you're looking for. And now we're looking at a bit of a kind of like similar rounding, where, all right, if we can get through that 176, that first day of trading's high, which is now your kind of resistance. So it's going to go like this. Either this hits its head and comes back in and goes sideways, probably around 170 for a while, or it can actually break through 176. Then we see 186. And then you become momentum trade. 198, I think, is very realistic here. But this is decidedly resistance, this entire range. So between 186 to 198, that is resistance. If it's trading over 198, she's gone. And it's going to get real wild, because this should be a low float situation, but we'll see how the lockups and stuff like that happen. But in reality, what would probably happen in that scenario is that you go into more consolidation, which kind of looks, I mean, this is where people are like, oh, stocks don't always go up. It looks like this. Literally looks like that. So that's what I see right now. And maybe it's somewhere along those lines. But this 195 is absolutely going to be your resistance area. I know it's a 6-minute chart, don't mind me, but it's what you have to do right now. And that creates kind of like two areas. So one, where it's breaking out of right now, but two, if it does make a new high back over, again, that kind of pullback, retest here, base, that's going to create a bit of your consolidation that eventually will resolve one way or the other. Here's your consolidation. So that's what I see, and your outer limits, if you will, to the upside are going to be 200, and then like 1 160 to the downside. So meaning either it's below that and you're going this way, or it's above that and you're going this way, and you have a bigger move. But for right now, it's basically building that move, and that's what this is what that process actually looks like. So it doesn't look like it's going parabolic yet by any means. It's got a ways to build.
Okay.
And AMD is going to a trillion.
Oh, it's almost there. It's $950 billion.
It's basically there.
Basically there.
Do we miss anything? Any Q&A on Qualcomm? No. I had a. Do you have a price target?
I don't have a short-term price target. I got to really think about what they said and really look into more. But I think long-term, when you look at how the chip companies are trading now, if Qualcomm are going to really make a foray into AI chips for data centers,
right?
They could get acquired by somebody with the valuation they're at. Actually, Intel where they're trading, or AMD where they're trading, AMD should just acquire Qualcomm for the free cash.
Right?
That's what I would do if I was Lisa Sim.
Pull a Rocket Lab.
Yeah.
Buy Iridium.
It's called your company's 4x bigger. Issue a ton of shares, do an all equity deal.
Yeah, I think is the bigger, like, what if there's dilution here before we get the AI multiple? I hope they wouldn't do that, but I mean that's always possible, because like I there are rumors that there are other acquisitions coming down the pipe, but I don't think it after that investor day, I don't really know how it continues to sell off on this earnings, because dude, C1000 was so not on my radar. They're talking custom silicon also.
Dude, I'm sorry. Burry just short Nvidia again. He just short Nvidia.
He's ridiculous. He's ridiculous.
The hell is this guy doing?
I don't know. But like, I didn't have this on my bingo card at all. Whole new product. Yeah, I do think that it's possible we go from what were we? We were like in the beginning of data center build-outs, we were like 8 to 12 CPUs for every one GPU. And then we go somehow to 8 GPUs, maybe 10 GPUs for every one CPU. And now I think we're at parity, 1 GPU for 1 CPU. And actually, I think we go 8 to 12 CPUs per GPU. And I think that is why maybe Intel still, all the others. And dude, I feel like this company, Qualcomm, if it gets big enough, could probably also spin off like a ton of these other business units. But anyways, yeah. So this edge, I think, is their 2 edges where they get to go. Mobile, automotive, both bottomed. They're positioned to do well. Trying to find the better slides.
Crazy.
Yeah, it's the amount of shenanigans that went down there. I was like, oh my goodness. I mean, the car stuff. Well, I had my car today. Decided that it was going to turn into Gemini, or no, last week. This earlier this week, my car, and I don't even pay for Gemini, but it was Google thing. Was like, all right, we're going to change everything to, you're now going to talk to Gemini when you drive. And I'm like, oh my God, what the hell is happening? It's happening, man. It's happening. I know this one is was weird. What a name, Hugging Face. Yeah, a lot to swallow, I think, on Qualcomm.
Yeah, I think Qualcomm is just
gross.
So undervalued.
I mean, it's cheap historically. There's risk involved in that. There's like, I just, they'll throw these numbers out. I think it's like, all right, Christian, he said a lot of stuff like this coming into it, and it's more like, I think it's becoming like the boy who cried wolf story, but also that's possibly the opportunity, right? Because like the market's just calling BS right now. Like, but dude, if you want to take it to 150, come to Papa. I'll pick some more up. That's all I know. So who wins tomorrow? You're gonna get my Honeywell up, dude. I can't believe you stole this from me.
Stole what from you?
If I had my Honeywell, I'd have gotten my first seed.
I will get it up for you. Don't you worry.
Qualcomm needs to buy Nokia. Dude, I don't know. I think that there's a lot of opportunity out there, guys. I always say this on a mid show. It's like raging bull market. I'm telling you, raging bull market. Like from the bottom of my raging. Sienna, are you gonna take this one on the rotation? I feel like we really.
I don't even know what this company is.
Oh my goodness. What are you doing? See my Hubble? Did you figure out my my thesis on Hubble yet?
No.
You didn't?
I didn't even look at it, to be honest with you.
Oh,
Dude,
it's the picks and shovels of picks and shovels. So like I don't know that just because you're building the AI like data centers, I don't know that because I don't know that the people spending money to build out the AI infrastructure get rewarded from their stock perspective. I don't know that, but I do believe that the picks and shovels become, in the worst case scenario, like the most dependable revenue in the market, bar none. This is a pick and shovel of pick and shovels, like wiring and cabling. It looks super boring on the outset, but you can look into this. They acquired a company called PCX, which sleeper inside a sleeper of a sleeper. PCX acquired by Hubble. What they do is they do this thing called skids. Boom, there she is. So it is modular data center, drop and go. I think it's a business unit across the board, but it was a sleeper inside a sleeper with a distribution network, prefab mod data centers, all in one containers. Walk in, drop in from a crane, because the issue is what's all the cloud neo clouds talking about. The one who can get the gear lit up the fastest makes money the fastest. This is the fastest way to light up gear. Kabam. Anyways, there you go.
All right. I know what you're going to be going after.
What?
No, I'm just saying. I know what you're going to be going after.
I could tell you. We have like 3 months.
I don't listen. I don't want to know.
You don't want to know?
Don't want to know.
I'm very into the steel super cycle right now. Do you know about that one?
Steel super cycle.
Yeah, steel.
Yeah.
Like, you know, Nucor?
Yeah. Big fan, Nucor.
Dude, big fan. You like STLD, Steel Dynamics?
I don't follow them. I do follow Nucor, though.
What about Worthington Steel?
No.
No? Okay, what if Cleveland Cliffs was done going down and in front of a pivot that could actually shift this business back to a $60 company from a $10 buy price?
Oh.
Yeah, babe. Anyways, it's worth a read.
I'm looking at it right now.
It's worth a read.
So you think Cleveland Cliffs can pull a rabbit out of there?
How do they not? It's not really possible that they'll, dude, the tariffs gave the whole steel industry massive pricing power, which got them all out of their holes, which improved all their margins. The business unit,
Margins, they have no margins. This company doesn't even make money.
Dude, they had a lot of debt to pay off. Now they will. This is like rolled steel. But like, look at Nucor. It's expanding margins. It's been, and these are all pullbacks, pulling back. Same with Steel Dynamics. But we have the biggest data center infrastructure build in our generations.
No, I get that, but they are even negative on gross profit.
Yeah, you got to read into it. There's a reason. Then they're going to talk about what they're doing and how much longer they're going to be negative, if at all. They got this one big. Anyways, it's worth a read.
They got one big contract.
No. It's like their business is a little bit different. That has like, they can't turn their mining, like they can't turn their cost off like Steel Dynamics and Nucor when the market's soft. So they have asymmetric upside when the market's hot, and when it's downside when it's soft. And it's been soft, but they've had to.
In the past decade, they've only exceeded $1 billion of EBITDA for 3 years.
I know, dude, but past performance is not indicative of future
results. I get that, but why are we not looking at copper miners?
Well, my copper miner is tech, so I'm on tech resources.
Copper is probably the most needed mineral of the next 5 years.
Yeah, you own it. Tech resources. There's your pick, right here. But it's not in your. Is it even in the draft? I don't want Freeport. It's too expensive. For that reason, it's not going to get picked. Rio Tinto would be the next.
Rio Tinto.
It is not in the mix. I'm not going Southern Copper. No shot with that valuation. No way in hell, in heck. But that would be your purest of the pure plays, Southern Copper Corporation. But you tell me why. These bad boys have run already. I feel like there's the biggest like infrastructure overhaul since Eisenhower coming. But anyways, these are very good companies. I think it's mostly priced in. What's the PE on Freeport? It's hot. Chart looks good, but it's hot. 90 billion. But I'm not gonna. You can't disagree about the copper theme. That's happening. That is happening.
Yeah, I mean, it's not just
the pyramids.
It's robotics. It's full self-driving. It's everything. Like, we need so much more copper, silver, and other things. And copper, especially for wiring and everything else, like copper is so important.
Oh yeah, no question. This was expensive. I feel like and they had one issue with one of their mines. I like tech resources. It's the most fairly valued. It's still there. Rio Tinto is good. You own this Rio Tinto. She looks good. 162 billion. Man, oh man. What's tech? 29. I'm going to the sweet spot. Similar to why I did Talon over CG or any of that. Like, I had to go high beta with Maddie coming in hot, but I don't know. But all the power plants, dude, for every incremental megawatt they start charging, it's like their profits are going up significantly. Just like Microns are going up significantly. These power plants, man, I'm just saying, are going to start charging up the wazoo. There's your inflation. It's not even oil. Is it Dominion? NVT. Chris has got a sleeper. I'm a little bummed he's sniped. I didn't think anybody would know what this is.
No, Chris came in and did some research.
Man. Sleeper ENS. Also, I think it's the behind the meter. It's BTM is you guys can look it up, but the bottleneck is it's the connection to the data center from the grid. And why CAT's doing what it's doing is because they're actually leading in like this behind the meter on-site energy production and storage, two parts, production and storage on site, which is why Bloom's doing what it's doing. Bloom just got another deal. Why it's so important. Enphase is super interesting. That's why. It's literally why. There's the other company that's legit getting deals is Generac. And I pulled Generac for Nebius, and it's not that I don't like, I still kind of second guess I feel like Generac would be outperforming Nebius. When do we draft?
Every 3 months.
No. When was it? It was on the 10th.
I actually don't know.
It was this day. So I would be up 8% on Generac versus I'm over here. Down 3% on Nebius. So she's got to pull it out. Nebius. She's got to pull it out. But yeah, I had to take Qualcomm too. I knew it was hot, coming in hot. I was like, it's the one I can't do without. I must have for all the reasons we have outlined today. Dude,
I hear you.
Now we're just wish they did fuel cell too. I don't know. Fuel cell.
It'll be all right.
Nebius.
All right. Gotta close it out. 7:20. I gotta go get dinner. Coming back at 9 o'clock with Chris.
Dude, you're back to back.
That's right.
What's for dinner? Pizza?
Thank you very much for Technical Tuesday. Appreciate it.
All right, guys.
All right, everybody.
Adios.
Please go follow Jason and subscribe to Jason's channel. Please follow me and subscribe to my channel. It helps us out a great deal. And thank you, Jason. Your knowledge is always impeccable. Thank you very much. All right, everybody. I will see you at 9 p.m. Have a great night.